All right, people. Let's do the balance questions. Let's see how we are able to answer the balance questions. Yeah. Yes. We're looking into the blast from the past, people. The question number 2 is being continued right now. Trying to understand what is happening in the question, past exam question. So let's pay attention to it. The question says the statement of profit and loss is given of an entity called as BAS Industries Limited. BS Industries Limited, who is engaged in the production and marketing of diversified products and has reported a net profit before tax of 72 lakhs for the year ended 31st March 2025. But they have also told you the following things. Now this question is a little easier, people, because they have split what is debited and split what is credited, so you don't have confusions here. But before I'm proceeding forward, let's check what is the requirement of the question. The requirement of the question comes and says you're required to compute the total income of BS Industries Limited. Give brief reasons for the treatment of each item, taking into consideration the computation of income, and you're ignoring 115 BAA. So a standard simple question, you're going to do normal total income. Yes, lengthy question because multiple items are there. So let's pay attention one by one. Let's see what we should do. Yes, items on the debit side, people, are very easy. Either you will plus or you will ignore. Items on the credit side, either you will or you will ignore. Either you'll minus or you'll ignore. That is what we're doing, people. Yes, so here you don't have a confusion of plus or minuses. Just take either ignore or plus or a minus. I'm starting with debit items, people. So I'm going to look at the items. You're going to tell me either to plus or to ignore. Either to plus or to ignore. People, we have already discussed logics multiple times. So now it's final answers. First item, depreciation as per Companies Act 24 lakhs. Hey, quickly. Plus. Next, interest amounting to 60,000 for short payment of advance tax as per section 234B for assessment in 24-25. I am plus. People, taxes paid under income tax to be disallowed. Interest and borrowing cost amounting to 9 lakh 50 and 7 lakhs through not meeting the criteria for recognition of component of cost included in the cost of opening and closing inventory respectively. Including in the cost of opening and closing inventory respectively. They are coming and saying I've incurred some borrowing cost on my inventory, which I should have charged to P&L, but instead of charging to P&L, I have taken it as cost in my opening stock and closing stock. Yes or no? Yes. One issue which I'm not able to understand, people, is that why is the 7 lakh rupees of closing stock being treated as debit? Should have technically been credit. Yes, but because they have told debit, let's work with debit. Now understand this once again carefully, people. I am coming and saying my 9 lakh rupees is debited to opening stock inventory. Assuming the component is not satisfying borrowing cost, you would have taken it to P&L. It is already there in P&L in the form of opening stock, which means no changes to make, and therefore this remains ignore. So 9 lakh 50 is a part of opening inventory and 7 lakh is part of closing inventory. Why? It's not. That's what I'm telling you. See, if you tell me my opening stock is overstated by 9.5 lakhs, where is it showing? It's showing in the debit side of a trading account. If you are not going to recognize the cost, you would have put it where? P&L. Yes. So if it's an overstatement from gross profit, what is your intention? You want to remove it from gross profit and put it in net profit. Remaining answer remains. Yes. So the treatment will not change. While what you can do is you can add it from your gross profit and take it to your net profit. The answer is not going to change itself. Yes. So to the extent of opening stock, I'm not seeing an impact anywhere. Agree? You ignore the 7 lakhs. Talk about the 9.5. Think about the 9.5. 9.5 is part of my opening stock. Correct. Assuming it is not included in stock, what will you do? Your opening stock will come down. If your opening stock comes down, what will you do? Your profit will increase. Correct? On the gross profit level. But this should not be part of opening stock, meaning it should be part of expense ledger, which means it will be moved to net profit. So you're going to do what? You're going to increase your gross profit and you're going to reduce your net profit. Net effect is. Agreed. The critical part is to understand what to happen for 7 lakh rupees. The critical part is to understand what to happen for 7 lakh rupees. Read the line once again carefully. It says interest and borrowing cost of 7 lakh rupees, though not meeting the criteria for recognition of component as a cost, is included in closing inventory. Huh? Current opening stock, where do you show in accounts? Huh? No. Opening stock does not happen from closing inventory. What they're saying is current year opening inventory में क्या है? 9.5 lakhs extra है, जो नहीं होना चाहिए. जो नहीं होना चाहिए मतलब कहाँ दिखाना चाहिए? अगर ओपनिंग स्टॉक में नहीं होना चाहिए तो कहाँ दिखाना चाहिए? P&L अकाउंट में. तो तुम क्या कर रहे हो? ट्राई मानव. I have a P&L on my opening stock, assuming I should have had 1 lakh rupees, but I have 10 lakh 50. Correct? You have 10 lakh 50. Now you have to reverse from 10 lakh 50 to 1 lakh. So you will credit, which means profit is going to increase by 9 lakh 50. So you have to add, but this is also an interest cost which you have incurred. So it is not part of component cost. Where should it go then? It should go to the P&L, which means on the bottom you will say what? Interest and borrowing cost. How much? 9 lakh 50, which means technically profit will come down by, which means this you have to, therefore net effect is that's the next question. 9 lakh 50 is getting ignored. That's what I said. 9 lakh 50 is getting ignored. Now comes the question of the 7 lakhs people. Now 7 lakhs is what I'm a little confused about, because it says interest and borrowing cost amounting to 7 lakhs, though not meeting the criteria for recognition of component of cost, though not recognizing the component of cost, is included in the closing inventory respectively. So closing inventory is also increased by 7 lakhs. Closing inventory is also increased by 7 lakhs. Should it be increased by 7 lakhs? No, which means closing inventory will come down, which means you have to minus how much? 7 lakhs. Now because it is a cost, do you have to do something with that in the P&L? Do you have to do something with that in the P&L? Yes, you have to take it to your P&L. Yes or no? So you have to minus 7 lakhs there. You have to minus 7 lakhs there. So one side you are going to add 7 lakhs, the next side you are going to minus 7 lakhs. Again net effect remains 0. Again net effect remains 0. Now this is what I feel. Hey, no, 1 second. So there you will reduce 7 lakhs and again you will reduce 7 lakhs. So therefore becomes minus of 14. Minus of 14. That is what I feel is the right answer. That is what I feel is the right answer. People, please understand, for those who would have done final accounts properly, closing inventory is never valued in the P&L. Closing inventory is always a additional information. It's always an additional information. You give it on the bottom. So you value your closing inventory and then take it both to P&L and to balance sheet. So what is happening is closing inventory is showing higher by 7 lakhs. Should not show that much higher. Because it should not show that much higher, profit should come down. So profit will be reduced by 7 lakhs. At the same time, people, it's an interest cost which has not been reported in P&L, should be reported in P&L and therefore reduce another 7 lakhs. Net effect should be, that is what I feel is the right answer. Yes, based on accounting entries. Based on accounting entries. Is this logically making sense? Yes. On that thought, people, let's check what IC has done. Let's see what the answer is. So what they've done is they have come and told, as per ICDS2, interest and borrowing cost which does not meet the criteria of recognition of cost cannot be included in the cost of inventory. Since the same has been included in opening and closing inventory, the difference between both, which is 9 lakh 50 and 7 lakh, is to be added back. That's what they've done. Have they make a second adjustment subsequently later? No, they have not made any subsequent adjustment. So they have made a difference of opinion, people. Their assumption is what? Their assumption is my assets are being overvalued. Their assumption is my assets are being overvalued. My inventory is overvalued by 7 lakhs. My closing is overvalued by, ulta. My opening is overvalued by 9 lakh 50. My closing is overvalued by 7 lakhs and therefore net effect of 2,50,000 is overvaluation, which they have disallowed, But then this also begs to the cost, people, that you may have changed the inventory. What about the cost? Because even though it is not included in the cost, it is the cost which is to be booked. Think about this carefully, people. I have an interest cost. What is the entry I should have passed? Interest to bank. I should have passed interest to bank. What I have passed? I have not passed interest to inventory. I have passed opening stock to bank. Yes or no? Yes, I should have passed interest to bank. I have passed opening stock to bank. Now, if you're telling opening stock is overvalued, you're reversing the opening stock. Apo interest also should be booked. So net effect should become 0. Correct, not correct? Yes. So they have taken into consideration the overvaluation of the stock, but have forgotten to take the interest component. Which is what does not make sense here. Yes or no? Yes. So to that extent, this question does not make sense. But a question of the past, which is why I've given it to you, people. Sometimes things may go wrong, and therefore please pay attention to this. Overthinking is also sometimes challenging. Yep. Yes. If you keep it safer, like Manav said, just take the 9,50,000 and 7 lakh and then put the difference of 2 lakh as disallowance. That is what most safest option would be. But from an accounting standpoint, this does not make sense, because this is like indirectly coming and saying that the interest cost which you have incurred is the permanent loss. Because if you are disallowing it here, net effect of interest cost has never been taken in the P&L, which means you have lost the cost, but you have incurred it. Which was allowed to you. Should have been given to you, which has not been taken into consideration. To that extent, this does not make sense. Yes or no? Again, people, questions like these where the treatments can go wrong, ICA will always give alternative, so don't worry about it. Yes. So in this, from an ICS perspective, I'm telling plus 2.5 lakhs, assuming overvaluations of stock. Clear? Yes. Move forward. Expenditure of 41,000 is paid in cash. People, the moment I see the word cash, I am at 48.3, comprising of 22,000 which is directly paid to producer of daily farming products, and 19,000 paid towards printing and stationery items to trader. People, I have paid totally 41, but in that 41 I have paid to two different parties, 22 and 19. 22 made to farmers, 19 made to traders. Farmer becomes ignore. You can either do plus or you can ignore. You can only do plus or ignore. So therefore this gets ignored, and the balance 19 gets added back or disallowed. Next, 3,50,000 is paid to a contractor for carrying out repair work at a factory premises. Tax was not deducted at source on these payments. I am not deducting TDS under 194C. I have to disallow. Number becomes 1,05,000. I have to disallow 1,05,000. Correct. Next. 35,000 was incurred towards earning income from transfer of carbon credits. I don't know if you people remember this, people. Have you seen this somewhere? Nope. Very good. We have looked at 115 BBG, people. 115 BBG provisions basically come and say that if you are receiving any kind of income from transfer of carbon credits, they are taxable at a concessional rate of 10%. Without allowing any expenses or deductions. And therefore this will get disallowed, because the corresponding income is going to be offered at a special rate. Next, contribution to electoral trust, 3 lakhs is paid by check. I will. And very good. I'll move to 80 GGB, sorry. I'll move to 80 GGB. Yes. Next, expenditure towards advertisement in brochures of political party registered under 29A of Representation of People Act, again paid by check. I will. And 80 GGB. Interest on loans obtained from cooperative banks not paid before the due date of filing of return of income. Every time you see the word not paid, people, two things can get triggered. Either 40I, 43B. This is not a TDS related question, it's a 43B related question, and therefore this will get disallowed for 100%. This will get disallowed for 100% people. 43B is 100%. 40I alone is 30% for residents. Yes or no? Yes, that is why you have to pay attention to it. Next, actual contribution to pension scheme of employees is 1,90,000. People, no information given of salaries. Assumption is it is within 14% of limit, and therefore ignore information. Correct. Move on forward, people. I am in credit side now. You will tell me either to minus or ignore. It says unrealized rent of 3,80,000 pertaining to 21, 22 and 22, 23 is recovered during the year in respect of a commercial property which is owned by the company, which was sold by the company on 23rd March 2024. Read once again. I am saying there is an unrealized rent which is pertaining to previous years is recovered during the year in respect of commercial property which was sold in the current year. People, for those who remember HP chapter, I told you in HP, rents of past years if received in the current year will be taxable in the after. Are you in the business of letting out properties? Unless and until you are in the business of commercial properties, it is PGBP. Yes, people, this will be taxable under the head HP. Whatever rent you allowed as deduction earlier has been recovered right now. So this will be in the year of after. Very good. First of all, remove this from and take it to HP after 30% deduction. After 30% deduction. Yes or no? Yes, people, we had discussed this when we did HP. I told you that if you're in the business of letting out of commercial properties, then only you can be treated under PGBP, because there is a case law called Chennai Properties where they come and say you should be predominantly in the business of letting out of properties. But with the current year amendment, people, even if you are in the business of letting out of residential property, you are under HP only, which means you should be in the business of letting out of commercial properties to be under PGBP. Otherwise, everything goes to HP. Next, dividends from a specified foreign company, including expenditure of 20,000 incurred for earning such dividends. People, this is move from PGBP, add to IFOS. People, again, I have a question here. We are in the heading called items credited. So I am talking about dividends here. So dividends gets minus 1.6 and gets added 1.6 in OS. But there is a line on the top saying expenses. Now I don't understand. Is this expense debited to the P&L or credited to the P&L? If you tell me this expense is credited to the P&L, this is a wrong entry. So first minus it. Nothing to be done in PGBP, to go to OS and reduce it. If you tell this is debited to P&L, I will plus this and then take it to PGBP. Or I can make assumption number 3. Because I am in the heading called credits, this is just an extra information which is not there in the P&L itself, in which case I will ignore it in PGBP and take to IFOS. Yes, people, this is how ICI does exam questions. They want to write something and something goes wrong. Here you can make an assumption, any of the three. Logical sense, it is there in the P&L in a debit. It is there in the P&L as a debit. So therefore I am deciding to plus 20,000 in PGBP and minus in OS. Dividends from a specified foreign company, including an expenditure of 20,000 incurred on earning such dividends. That's also another assumption. That can also be another assumption where you can come and say it's an interest cost and therefore it is not allowed as deduction. What do we do? You have 5 different alternatives. It doesn't matter, people, just do something. Yes, what have they done? Check. So they have removed 1,60,000. Since the question does not list the expenditure of 20,000 incurred on earning dividend income under items debited of P&L, such expenditure has not been added back. Okay. OSLA, they've taken 1,60,000 as it is, which means they've taken alternate number 3. 20,000 was not even there in the P&L. They've taken an assumption that 20,000 was not even there in the P&L, and therefore nothing is done in PGBP nor is done in IFOS, because they made an assumption this is not interest cost. Then it is allowed as deduction up to a maximum of 20%, because it is less than. That's what they're not saying. It's a. So where does it say 1,60,000 includes 20? यहाँ मतलब क्या? Claim. After the claim. But it says including, no? Including, it can also mean 1,40,000 plus 20, no? But I don't know. See, how do you say including then? It's called after considering. It's not including. If an effect has been given, I would say what? Dividends earned after considering 20,000. How do you get dividends including expenditure? Including means to add, right? This is minus. Which is what the weird thing is actually. If you look at the debit side, the closing inventory is shown plus. So they didn't do that. Right? Yes. People, I'm telling you very honestly, sometimes when ICAI wants to overdo things, things will go wrong. Yes. So you can never be sure about this fact. And I think I told you on the first days of the classes also, people, when it comes to compulsory question, don't have the belief that you can score the 15. Okay. Because something or the other will go wrong. Something or the other will go wrong. Therefore, don't pay attention to details too much. Because the more time you spend here thinking, the more marks you're losing elsewhere. Yes. So make a choice on the first go. No matter what you make, ICAI will have an answer to it. Yes. Last time I checked, if mistakes like these comes, ICAI will give you alternatives. And therefore, no matter what you write, everything is correct. Yes. I have in fact seen questions, and I'm not even joking about it, people. One compulsory question had given 5 different alternatives. They literally prepared that one question 5 times. Yes. So suggested answers mein, it comes and gives you one format. And they come and say, because point number 2 had this thing, which we are not clear about, alternatives can be as follows. And they'll give you one full-fledged question once again with second alternative. And then one full-fledged question with third alternative, full-fledged question with fourth alternatives. Not for you people to prepare, but for examiner to correct whichever total income matches, give him full marks. Yes, that is how it goes, people. So sometimes it is okay to take a chance. It is okay to take a chance. I don't know what the answer is. I am making an assumption, nothing of this to be considered. Nothing of this to be considered, meaning just remove the 1,60,000 and take it to IFOS. Yes, move forward. It says profits of 3 lakh rupees received from hedging contracts entered into for meeting out losses in foreign currency payments towards imported plant and machinery valued at 95 lakhs, which is installed on 15th December 2024 and put to use from that date. Nope. No. While you're focusing on one thing, people, something else is getting missed out. It's a nope. It's very good. 43A. People, when you have an imported plant and machinery, I told you any expenses which you incur on the imported plant and machinery from foreign country will be capitalized. So 43A comes and says any exchange differences or any related expenses on and foreign asset will get capitalized. This is a profit, which means it should have been reduced from the cost, but it has been booked in the P&L. So I am minusing it from the PGBP. I will have to take it to depreciation schedule. But 99% of the cases in this question, they would have said depreciation as per income taxes this number. So which means it's already adjusted off. Yes. Next, interest from banks on fixed deposits, net of TDS of 10%, 1,35,000. People, this 1,35,000 is after TDS. First of all, in my PGBP, people, how much did I book? 1,35,000. So I will reverse 1,35,000 in my PGBP. But when I go to OS, I can't book net number. I need to book gross number. How does it happen, people? 1,35,000 is 90%. How much is 100%? 1,501. So 150 gets added to my OS. 150 gets added to my OS. This is one area, people, where most of the people will make mistakes. While they will end up reducing the same number and adding the same number, don't do that. What happens in PGBP is a different conversation from what happens in OS, predominantly because of the fact that you have TDS in the middle. Yes, so please pay attention to these kind of questions. This kind of questions is what I say I would love to test you much. Yes, yes, move on forward. Additional informations are now given to you, people, which says depreciation as per income tax rules is 28 lakhs, but is exclusive of the depreciation on the imported machinery referred to in B3. So they have told you depreciation which I am giving you as per income tax is 28 lakhs, which you can claim. But for the asset which is referred on the top, I have not even considered any depreciation, which means I need to compute the depreciation, people. My machinery is worth 95 lakhs, in which I have a profit of 3 lakhs, which means technically my cost is only 92 lakhs. I need to give depreciation at the rate of a 7.5%. I need to give depreciation at the rate of 7.5%. But look at the question also carefully, people. I am in production and marketing of diversified products. Production means manufacture. You should be liable for additionals also. Which means it's 92 into 7.5 plus 92 into 10% also. Two additional depreciation will be given to you. Next, expenditure pertaining to previous FY which is allowed on due basis but in current year has been paid in cash on 18th January 2025 of 35,000 rupees. People, we are under same 48.3. Same under 48.3. For those who remember, people, income tax said if you are booking something on accrual basis and in subsequent year you make the payment in cash, income tax will deem it as income in the subsequent year. Section 48.3a. Section 48.3a comes and says if an expense is booked in the past and the payment is happening on a subsequent date, in the subsequent date, since there is no expense in the P&L, there is nothing to disallow, and therefore I will deem it as income. So therefore this gets added. Section 40A3A. Section 40A3A. Exactly the next para after 40A3, people. Check in your books. Yes. Next, audit fees is of 23-24 75,000 rupees. People, this audit fees is previous year. TDS deducted but not paid in the relevant previous year. However, TDS was paid on 31st December. People, past year I did not pay TDS, which means past year I would have. Current year I will allow only. Number becomes 20. Therefore, minus 22,500. Yes or no? Yes, this is the extra change which they do from inter to finals, people. In inter, they'll only keep giving you disallowance of TDS. In finals, they'll give you allowance of TDS. Extra ulta. Yes, extra benefits for you. Next, income from transfer of carbon credits of 4 lakh rupees is included in net profit before tax. So this is a part of P&L. I will minus from PGBP, add to other sources so that I can tax it at 115 BBG. After adding it separately. Next, the eligible salary and dearness allowance for the pension scheme is 10 lakhs. So which means something is wrong on the top. On the top, people, have contributed 1,90,000. I could have contributed 10 lakhs into, which means I need to disallow 50,000. I need to disallow 50,000. Like I told you earlier also, people, NPS related questions is something which ICA tests you very often. Yes, and therefore for the current year, very important also for the fact that there is an amendments on it. Yes, so pay attention to that as well. They're asking you only for total income, people. Luckily, only total income is asked, so therefore carbon credits does not have to be worried about. Yes, you don't need to compute tax on that and all. You can just leave it as it is. Yes, just mention the fact that it's taxable for 115 BBG and therefore no corresponding expenses are allowed as a deduction. Correct? Clear? Yes. Weird question, people. 2 adjustments for you to pay attention to. Adjustment number 3, adjustment number हाँ हाँ, बी का सेकंड adjustment number, बी का 2, adjustment B2. We have disallowed it. Even if you take it to OS, it's not allowed as deduction, no? No. Income is being informed. They're not telling it's correct. So what you have done? Right side would have had 4 lakhs. Left side would have had. So what you did? Right side you removed 4 lakhs. Left side you added back 5 lakhs. You're telling this 4 lakhs is net of expense. You're telling this item is net of expense. Where is it given that? What is included in net profit? Okay. Income means revenue minus expense, you're telling. No. People, okay, let's also understand this carefully when it comes to P&L. When it comes to P&L, at least accounting P&L, what you report on right side is all your gross, and what you report on the left side is all your expenses. You don't report net offs. Net offs are only reported in NPOs, which means this 4 lakhs is gross. Okay. So gross of minus expenses of carbon credits gave me net profit of carbon credits. Saying that. Okay, and that number is what you're telling is 4. I'm telling the gross is 4 lakhs. That's what I'm trying to tell you. See, because you are making an assumption that in the P&L, what is happening is you are reporting 4 lakhs as the net number. I'm telling that's not how it gets reported. In P&L, what gets reported? Right side will report the 4 lakhs and left side will report the 5 lakhs. Correct, Manav. Correct, Sehul. But what is happening is the net profit number which you have is having that number is what they're saying. They're not saying this number is after the expense. See, it's like me coming and telling my expense of 5 lakhs is included in net profit, and my income of 4 lakhs is included in net profit. What does it mean? 5 lakhs is showing on the left side and 4 lakhs is showing on the right side. So what I'm doing, 5 lakhs gets disallowed, 4 lakhs gets reversed, net of those number is moved to OS, but unfortunately I cannot move the net number because 5 lakhs is not allowed as deduction, right? Included does not mean it's net number. That is why I'm telling you, look at it from a P&L perspective. If you're preparing an accounting P&L, will you ever report the net number in the P&L? No. Ma'am, net profit will have all numbers. No. I'm telling numbers will get reported on net level or not. Numbers will never get reported on net level. Numbers will be reported on gross level. So expense on a gross level will be sitting in left side and income on gross level will be sitting on right side. So technically what you do, you take that into consideration, which means this 4 lakhs is not the net number, it is the gross number. Yes, don't overcomplicate things also because that becomes an issue. I think that's all the question is, and just for your convenience, I'll show it to you also. I think they would have. Why? Income. Okay, so they're telling it doesn't matter. No, they've not ignored it. They're just coming and saying whether you call it as business income or income from other sources, it doesn't matter. So which means where you put it, because the tax is going to be at the rate of 10% only. So you put it in IFOS or you put in PGBP, doesn't matter. Better disclosures always put all these items in IFOS because then you can report it separately, right? So either you remove it from here and take it to IFOS or you ignore it off. The answer remains the same. The adjustment is not going to change. But the fact is they have removed only 4 lakhs. If you notice, 4 lakhs is what has been ignored here because that is what you were transferring. Expenditure has been disallowed separately earlier. I have done it where? Yes, Upar 35,000 has been disallowed fully. Yes, so it has on a gross level only. The understanding which you're having, Manav, will only apply when you're doing an NPO. Because if you remember when you did foundation NPO mein whatever expenses which are directly relatable to the income, you cross register off. That is not how it reported in Companies Act, and so therefore don't take those adjustments. Yes, I believe we are going to do question number 3 as a practice, people, but let's see how the question looks like. It says, Anamika Builders and Constructions Limited is a company resident in India and is engaged in the business of construction and real estate. So I am into real estate business right now. Net profit of the PGBP is been given as 54,80,000 prepared in accordance with ICDS after taking into consideration the following items. People, if my memory serves right, the moment you see a real estate, for sure you're going to get a question having ICDS 3. We're going to have ICDS 3 in the question. Be very careful about what kind of adjustments to be done on that. Yes. Focus attention. Sorry. Focus attention. Before that, let's look at the last line. It says, you are required to compute the total income chargeable to tax in the hands of Anamika Builders and Constructions Limited, giving a brief explanations of all the items of additions and deletions. Ignore all the provisions of MAT. Ignore all the provisions of MAT. That is what the question comes and says. Yes, I'm looking at each item, people. Let's see what is happening. They have debited and credited all the following items. The first item says depreciation debited to books. Therefore, I am disallowing it. Next, gross revenue includes 5 lakh rupees in respect of a service contract for maintenance of the office building of Nitup Limited for the period 1st March 2025 to 30th April 2025. The expenses incurred on the project till 31st March amounts to 1,27,000 is included in other expenses. So if you notice carefully what they have done, people, the gross revenue of 5 lakh rupees has been put into the P&L. But this gross revenue reports pertains to 2 months, 1 month of current year and 1 month of next year. At the same time, people, the expenses which are incurred on the project amounts to 1,27,000 also has been debited to P&L. Also has to be debited to P&L. Here comes your ICDS 3. You need to tell me what to do. See, here the question is very clear. Expenses of the 1 month only. So no problem. Revenue alone is an issue of 2 months. Revenue alone is an issue of 2 months. Here is what you need to make a choice for the question. What is your logical answer? People, logically, what are you going to tell me? Very good. People, understand where the service contract is for a period less than 90 days. ICDS 3 comes and says you have to report it based on project completion method, meaning expenses and incomes both will not be reported in this year. They both will get reported in next year. Which means I will disallow the whole expense and I will reduce the whole profit. Because of I am following ICDS. Again, people, project completion method requires that the whole revenue and the whole expense is accounted only when the project is completed. Therefore, the whole 5 lakhs got reversed, the whole 1.27 got disallowed. Take both into consideration when you complete the contract in April. Focus on the question very carefully. Very good. Move forward, people. Yes, the amount of employee benefits includes 4,41,000 in respect of bonus payable to employees. People, the moment I see the word bonus, I will trigger 43B. In the previous year 24-25, the company and its employees union had a dispute over the payment of bonus. In order to avoid late payment of the bonus, the company has formed a trust and has transferred the amount of bonus payable to employees to the said trust. The dispute was settled in the month of November 25 and the trust paid the bonus to employees in 30th December. Basically, they are coming and telling boss, bonus was supposed to be paid. But because there was a fight going on, I decided not to pay. To safeguard myself, I decided to pay it in a trust. And that payment to trust has happened before the due date of return filing. That decided payment has happened to the trust before the due date of return filing. But the employees got it only in December, which is after the due date of return filing. Question to you, payment to the trust, can it be called as a payment to an employee and therefore allowed as deduction? Can it be deemed as a payment to employee and be allowed as deduction? Answer is no. This is one special adjustment which we have written in your PGBP chapter also, people, that payment to a trust is not a constructive payment. You will get the deduction only when you pay the money actually to the employees. Therefore, this will get disallowed. You're not allowing this deduction. Yes, sir. 43B. Yes, because 43B says bonus and commission paid to employees. Yes, the fund related provisions are only for retirement benefits. Like gratuity, PF and all those things. So therefore, putting it in a trust is not a constructive payment. So pay attention to those. Yes, capital gains on sale of shares in Yara Limited is 3,77,500. I will take it from my PGBP and to move it to capital gains. The only problem with this question, people, I don't know whether it is long term, short term and all. Ideally it doesn't matter because the question does not want tax payables. Next, in respect of one of its ongoing projects, the assessee has made some structural changes contrary to what was earlier approved by municipal authorities. Assessee hence has paid a sum of 98,000 as regularization fees in respect of such changes made in construction plan. I will disallow because very good offense payment. This is an offense payment. People making a payment to municipal authorities is an offense for a law. You have violated the conditions. You should have not constructed the property that way, but you did it, and therefore this is a penalty levied on you. We told penalties can be in various forms. It can be in the form of compounding fee, regularization fee, any expenditure incurred for settling proceedings. All those mean the same. Yes, to be disallowed. Other expenses includes 1,40,000 as expenditure incurred on CSR, to be disallowed. Normally, people you can claim 80G, but I have been given no information, therefore I am assuming not allowed under 80G. Next, for the previous year 24-25, the company has decided to expand its business and open a retail petrol let out. Accordingly, a sum of 1,75,000 was deposited with concerned authorities. However, the assessee could not start this operations and the deposit with the authorities was forfeited. Why? It's an expense, da. You only have to decide whether it's capital expense or revenue expense. You decide. This is my feeling it's a revenue expense because they say very clearly it's an expansion of business. Expansion of business means current existing business only now. You want to check? Oh, they have disallowed again, Macro. Again, Macro. Yes, they have disallowed the expense, saying it is not my current business. Not my current business. You see, the comedy, and I have been telling this earlier also to you people, is that the comedy is Macro is not even part of your syllabus. Yes, ICA does not even have it as a part of your question bank, but unfortunately, questions keep coming on that only. And most of the people are aware only about yes, to be disallowed. To be disallowed. Unfortunately, people, because they're disallowing, you can't claim depreciation also because there is no asset into existence. Yes. Next, amounts paid for advertisement in political parties brochure, to be, this is fairly clear and therefore 80 GGB. This is fairly clear and therefore 80 GGB will come into picture. Next, during the previous year 24-25, the assessee entered into an agreement with BAT Limited. For the agreement, BAT Limited has agreed to not engage in the business of real estate trading. The assessee has paid 11 lakhs without deduction of TDS as non-compete fees. It's an revenue expense for sure, but trigger point is 40 AI. Very good. People, non-compete fees is notified under 194J. Is notified under 194J. You have royalty and non-compete fees also, which means you should have deducted TDS. Without deducting TDS, making payment makes a disallowance of, which becomes 3.3 lakhs. Which becomes a disallowance of 3.3 lakhs for not doing TDS under section 194J. Additional informations are given to you people. Depreciation as per income tax act is 5,14,000. This includes an amount of 978,000 in respect of firefighting equipments which are installed in various business offices. During the year, there was no incidents of fire and therefore the equipments were not used. Allowed because passive use assets are eligible for depreciation from the date on which it is available for use. Therefore, allowed depreciation is minus 5,14,000. Allowed depreciation is minus 5,14,000. On 26th October, out of 5 unsold office spaces in the mall, the assessee converted one such space in its own office. The fair market value of the space on the date was 15 lakh rupees. The cost incurred originally to construct such space was 10 lakh rupees. People, I had a premises which I have now converted into capital asset. Stock in trade conversion to capital asset has 2 implications. Implication number 1, first you'll have PGBP, then you'll have CG when you sell. When you sell, you have not sold it. So implication only happens at PGBP stage. Notice this thing carefully, people. First instance is PGBP, and therefore PGBP will be taxable in the year in which it is converted itself. Had it been ulta, had it been capital asset into stock in trade, capital gains would have been deferred to sale of stock. Because this is ulta, stock in trade is being done first. Stock in trade will be taxable in the year in which asset is converted. People, conversion profit is full value of consideration of 15 minus 10, therefore to be added 5 lakhs in PGBP. To be added 5 lakhs in PGBP. Yes or no? Yes. This is the way of ICI, people, to test you on small things which you have tested in multiple areas, which you have done in multiple areas. Focus attention. Next, this is where you have to be careful. Your ICDS 3 comes into picture. It says, in respect of ongoing construction contracts, there was a claim for escalation of prices to the tune of 8,50,000. The company has filed a lawsuit in 2023. During the previous year 24-25, the court gave its judgment in favor of the company, and the company has received 2 lakhs till 31st March. The gross receipts of 2 lakhs in gross receipts of P&L includes 2 lakhs in respect of such claims. People, I raised an escalation for 3, court approved full 3, court approved full 3, but I got only 2 in my hand. I booked only 2. Here comes the question, how much you should have booked? 2 or 3? If you tell me 3, then you will have to add an extra 1 lakh. Or if you tell me yes, 2 alone is to be booked, then balance can be booked in the year in which I get it, then it is no information, then it is ignored. Here's the question, escalation price is to be taxed as and when it is received or as and when you are confirmed? You tell me, I don't know. Meaning? It's a lawsuit, there is nothing in the original contract. Escalation price has nothing to do with both. One lakh has to be, because, so that's what my question is escalation price taxable when it is received, or is escalation price taxable as and when it is accrued? Ma, that is capital gains, ma. We are in construction contracts. Tell me. Tell me. Why have they taken 6,50,000? Oh, acha, sorry. It was 8,50,000, is it? Sorry. Okay, then the question is, do you recognize the whole 8,50,000 or do you leave it at 2 lakhs? You will recognize the whole 8,50,000. When the order is certain, people, escalation in prices come and confirm that you will have to recognize it as revenue. Even if escalation has not been confirmed, but the money has been received, then it is taxable on money, which means it is technically receipt or confirmation, whichever is earlier. Since you have booked only 2 lakhs, you are taxable for the balance 6.5 lakhs. You're taxable for the balance 6.5 lakhs. We are in ICDS number 3. We are in ICDS number 3. Yes. Where have I written this, people? You will find it in your PGBP last page called as special adjustments. If you look at your PGBP last page special adjustments, you will find this line. If not, then you will be finding it in ICDS last. You'll find it there, escalation in price. Yes, last line, people, it says the associate has holded 250 shares in Yara Limited. The 1st April 2017, Yara allotted bonus shares in the ratio of 1:1. So I was having shares in Yara Limited. Company has allotted me 1:1 ka bonus in 2017. The company has sold all these shares on 24th September 24 for 20.50 per share. The company has acquired the original shares for 540 in 2016. Fair market value of the shares on 31st January is given as 1980. Is given as 1980 per share. People, with they giving you 1980 itself, a hint is given to you that it is an listed share liable for 112A. Liable for 112A. This is a capital gains component, people. Now, two things are happening. What have they done? Allotted bonus. Company has sold all the shares, so which means they have sold both the shares, people. Original shares also. Bonus shares also. Yes. Now coming to original shares, people. Coming to original shares, you need to tell me what is the full value of consideration. Question says full value of consideration is 2050. For the purpose of cost of acquisition, people, those who remember cost of acquisition, income tax told if you have an asset of 112A purchased before 2018, you will take FMV of 2018 or actual consideration, whichever is lower, then compare with actual cost, whichever is higher. So it is FMV or FVOC, whichever is lower, compared with actual cost, whichever is higher. My FVOC is 2050, my purchase value is 540, my FMV is 1980. I will take 1980 as the number. I will take 1980 as a number, giving me an answer of 70. 70, giving me an answer of 70. On the right side, people, I have a bonus. Now, bonus was given to me in 2017. So in 2017, when I got the bonus, cost was 0. Bonus cost is always 0. But luckily, people, this asset is also purchased before 2018, and therefore this will also apply the same rule. And therefore it is FMV or FVOC, whichever is lower. Therefore 1980 compared with the cost, whichever is, therefore 1980. Number remains the same. So it is 70 on both the sides. Number of shares I have is 250 for original, 250 for bonus. These are the shares which I have. Now here comes the question: is this gains already booked in my P&L? Ideally no, because it is a part of additional information, but somehow something gets triggered, people. I know there is something called, which means it is there in the P&L, which you have reversed. Basically what I'm trying to tell you, people, what you reversed is the number given in the additional information. So don't put two capital gains. There is only one capital gains. We were planning, no, people, that we'll do minus PGBP and plus CG. Don't do plus CG, because plus CG is coming from additional information. If you do this plus CG and that plus CG, it will become double CG. Because this is also Yara Limited only. Yes or no? Yes. So basically what has happened, people, to identify what kind of capital gains this is, they have given additional information. So don't plus the CG there. Plus the CG is only on the bottom. Yes. So yes. Although, people, as a bit of a hint, you and I have made an assumption saying this is 112A. At no appropriate stage have they come and confirmed that there is STD payment, and therefore you can assume this is 112 also. This is completely your choice. Assuming it as 112 would rather make it a lot more easier. Because asset was transferred after 23rd July, and therefore indexation benefits are anyway not eligible. With no indexation benefits, you will directly take 2050 minus 540 directly. 2050 minus 540 directly on originals, and bonus will become 2050 minus 0, because when you are under 112, people, 2018 is not relevant. So their cost will become original cost without indexations. Both of them are right. You can choose what you want. Here I say would have given an assumption saying because 2018 is given, the assumption is STT is paid. You can also assume STT is not paid. Both answers remain the same. Yes, these are the kind of questions, people, where things will go complicated. Multiple assumptions will start coming inside. Yes. Safest option, I don't know what it is, people. Let's check what safest option IC has preferred. See, they've assumed it as 112A. Because 2018 information is given, something to do with it. Yes, so therefore they've assumed it as 112A, and therefore they've taken it from there. Separately given. Disclosures, people. Everything carries marks, no? Unfortunately. Yes, the answer does not change. The answer remains the same. So they've assumed it as 112, and therefore they've taken it from there. Clear? Yes. Couple of more questions, people. It says Anustup Chandra Floors Limited is a domestic company engaged in the manufacture of wheat flour and is giving you the following information. The balance says you are required to compute the income tax payable by the company. The company is Ind AS compliant. With a turnover of 350 crores, meaning tax at the rate of 25%. People, why am I giving you this information? You know, because they are telling you to ignore 115BAA, but I have not told you to ignore, which means this question requires you to do both. This question requires you to do both. The moment they start using Ind AS and all, definitely MAT is coming into picture. Definitely MAT is coming into picture, because they'll have something called Ind AS transition reserve. They'll have something called Ind AS transition reserve to be allowed over the next 5 years. Let's see what the question says. Net profit as per statement of profit and loss is given as 77 lakhs after considering the items listed in 2 to 6 above. People pay attention, it is only 2 to 6. Anything apart from that is not considered in P&L sheet. Yes, first item is saying company is a member of Vishnu Foods and Co. and AOP, in which the members' share are determinate and their shares in profit and loss are clearly known. People, I have a profit share from AOP. The AOP, they are coming and saying partners' shares are clearly known. The entire income of AOP is from business activities. During the year, the company has derived income of 9 lakh rupees from AOP. Company has spent 90,000 towards earning such income. Now, people, for those who remember, when it comes to AOP provisions, if the shares are known, you need to tell me whether there is any person, there is all members below basic exemption limit. Hey, you are a company, which means there is no basic exemption limit for you. The moment you were there, AOP started paying tax at the moment MMR was paid, you became exempt, which means reduce 90,000, 9 lakhs, reduce 9 lakhs and add 90,000. Reduce 9 lakhs and add 90,000. People, as we are doing this, you are also going to tell me what to do in MAT. So in my normal, I am doing minus 9 lakhs and plus 90,000. In MAT, am I doing this? Same? Yes, people, we discussed it in MAT also. People, in MAT computation also, all your exempt incomes are exempt in MAT also. All your exempt incomes are exempt in MAT also. So the provisions of MAT will remain as it is. No changes in MAT computation. No changes in MAT computation. Yes or no? Yes. Next, moving forward, the company has provided for income tax including 234B and C of 62,000 for 3 lakhs and 5 lakhs towards share in loss of a foreign subsidiary. Why is there two numbers? Oh, two different transactions. Okay. So income tax is 3 lakhs and 5 lakhs is towards share in loss of foreign subsidiary. So two different transactions, people. Yes. Point number one is 3 lakhs of interest and tax, both interest and tax, both. People, which one is not allowed? Both are not allowed. At which point of time are you claiming tax payments as a deduction? 48(2) does not allow any tax and interest both. So I am disallowing 3 lakhs. People, under normal or matter? Both. I am disallowing it under both. Yes. Coming to the 5 lakhs, people. What is the 5 lakhs? I have provided for a provision for loss in subsidiary. Provision for a loss in subsidiary. People, ascertained provision, unascertained provision. Ascertained, unascertained. Unascertained provision. This is a fictional provision. Therefore, to be disallowed under both. Number becomes plus 5 lakhs on both the sides. Plus 5 lakhs on both the sides. People, MAT computation also comes and says only provisions which are certain will be allowed as deduction. Any uncertain provisions get disallowed. Move forward. Amount debited to statement and profit and loss account also includes interest of 12 lakh rupees, out of which only 4 lakhs was paid. Out of which only 4 lakhs was paid on 12th December 2024, which is your previous year. So in your previous year, you paid only 4 lakhs, which means automatically 8 lakhs was not paid. Section 43B, you will disallow under normal. MAT disallow, not disallow? Not disallow. People, no adjustments of PGBP are taken in MAT. Remain as it is. Remain as it is. Don't make those changes. Don't make those changes. Next, the company has committed breach of building norms while extending the factory building. The city corporation initiated proceedings against the company and the company settled the issue by paying a compounding fees of 1 lakh rupees. This amount is forming part of general expenses which has been debited to P&L account. I have paid a offense payment and therefore under MAT ignore information. MAT will get ignored information. Correct? Yes. Move forward. In the administrative expenses, the company has debited a sum of 70,000 rupees towards fees for delay in filing TDS returns under section 234E. This is very good. Allowed as deduction. People, assumption of ICI, you can only disallow income tax returns fees. You can only disallow income tax return fees. TDS return fees is a compensatory payment and therefore allowed as deduction. Why? Don't know, but it is there. Huh? Hey, interest on income tax is always disallowed. TDS of interest, ICI does not prefer it. ICI will say disallow. Interest on TDS is a disallowed expense under ICS norms, but it is technically a compensatory payment, can be allowed as deduction. Yes, next. The company has credited revaluation surplus of 10 lakh rupees on fair valuation of asset under Ind AS 16 and Ind AS 38 to other equity. There is no adjustment in PGBP because it's only reported in other equity. Matt, nothing. Same, because revaluation surplus is an FMV. I told you when it comes to math computations, you don't take into consideration any fair value changes. You don't take into consideration any fair value changes. Only actuals are booked. So ignore in both. Next, the company has credited 5 lakh rupees to other comprehensive income on fair valuation of equity instruments in which company has investments. People, normal, it's not there in PGBP. Question comes, should it be there in PGBP? Same, no effect. It's fair valuation. Income tax says any fair valuation will get ignored off. Ignore it for MAT also. Unless and until it is certain and part of items which will not be reclassified to P&L, it will be ignored off. Next, during the current year, the depreciation charged as per the books of accounts in the company is same as allowable as the Income Tax Act. Super for you. Number also they have not given. What will you do? Take the number, ignore it off. You are required to compute tax payable by the company people. You will get the net profit on the left side. You will get the net profit on the right side. Left side will be taxable at the rate of 25 plus surcharge and cess if applicable. Right side will be taxable at 18.5%. Will be taxable at 15%. Will be taxable for 15%. 18.5 for AMT. Yes, so it is be taxable at 15% plus surcharge plus cess if at all applicable. Plus surcharge plus cess if at all applicable. Take the tax payable as whichever is higher. Under normal provisions, this is what will happen, people. You will complete all your answer. You will get your 85,90,000 as your total income. And under MAT computation, you will get under MAT computation, you will get 6,90,000. You will compare both and you will find that your normal provisions is higher. And therefore you will take it from there. You will take it. Sorry, no, they've ignored. That's what we did. Why? Is it there in the P&L? It's not there in the P&L. Now comes the question, if it is not there in the P&L, should you take into consideration? As per MAT computation, Ind AS rules, they come and say only consider those items which are part of OCI and are going to be reclassified to P&L on a and are not going to be reclassified to P&L on a subsequent date. In those items also which are not going to be reclassified to P&L on a subsequent date, ignore some items like revaluation surplus, fair valuation, any kind of demerger related fair valuation. All those three will get ignored. If you notice the item, they are saying this is therefore it is getting. That is what I told you in MAT computation also, people. Only take into consideration those items which are actuals. There should be actual expenses, and there is only one item in that which is provision for gratuity. Actual valuations which you do for those. Yes, the difference of the provision for gratuity which is booked in OCI alone is allowed as deduction because that is not fair valuation, that is a ascertained payment. That is how it operates. Yes. Great. 3 more questions. 1st April 24. B Limited is an unlisted domestic company engaged in the manufacturing of tires and has converted itself into LLP by the name SLLP, fulfilling all conditions of 47(13)(b) of the Income Tax Act. The moment they said that, people, it means the transaction is not regarded as transfer, but it also means cost of acquisition of the new owner is cost to previous owners. At the same time, whatever claims are pending in the old owner will be claimable in the new owner. Keep that thought in mind. Some of the relevant information is given to you. Before I look at the relevant information, let's look at the balance. कितना बड़ा है? You are required to discuss the implication of such conversion. What is the implication? Not taxable. And compute the total income in the hands of SLLP. Yes, so let's compute the total income. First one says 150 equity shares of T Limited, an Indian company which is listed in National Stock Exchange, was acquired for 1900 per share on 31st July 2017. On conversion, these shares became the property of SLLP. What is the tax implications? Nothing. The only tax implication is cost of acquisition of SLLP will become 1900 rupees, and period of holding will also start from 2017. That is what the answer is. Next, voluntary retirement scheme expenditure incurred by the company during 22-23 is 20 lakh rupees. The company was allowed deduction of 4 lakh rupees each of 22-23 and 23-24, which means, people, VRS can be allowed over 5 years. You have allowed only balance 3 will be allowed in LLP, will be allowed in SLLP, which means current year you will claim a deduction of 4 lakhs. Current year you will claim a deduction of 4 lakhs. Next, besides other assets which are transferred to SLLP by B Limited, it also transferred 2 factory buildings. On 1st April 2024, SLLP has leased out one of the factory buildings along with plant and machinery and furniture at a consolidated rent of 50,000 per month. This is income from other sources, because composite rent, people, you're not just giving building, you're also giving other items, and we discussed it in HP chapter. When it comes to composite rent, people, if you're able to split between house and others, then house goes into HP and other goes into OS. But if you're not able to split, everything goes into IFOS. The problem with this now is that the amount given here will be multiplied by 12, will not be allowed 30% ka deduction. So number taxable is 6 lakhs directly. Number taxable is 6 lakhs directly. No deduction of 30% because we are taxing it under IFOS. During the previous year 24-25, SLLP earned a profit of 25,40,000 after debiting and crediting the following items. People, since number is starting from here only, the rent which is showing on the top is not part of P&L. Is not part of P&L. You don't take that into consideration. VRS is also not part of P&L, which means you have to claim it now. You'll have to claim it now. So 25,40,000 lende, you'll have to do nothing for OS but remove 4 lakhs. The question comes and says, Mr. Bharat is a working partner of LLP. He's also a working partner in another firm. He is actively engaged in the business of both the firms. Bharat is getting a salary of 55,000 per month from SLLP. He is the only working partner whose remuneration is authorized by deed. I will disallow this. In order to compute my book profits. So I will disallow this and compute my book profits. Next, Ayush is an employee who's deputed to work in a client's office in Mumbai for 3 months. The LLP has paid his salary in cash for the months which he was in Mumbai, amounting to 3,45,000 net of TDS and everything. Since he did not have a bank account in Mumbai, the payment was made in amount, it was included in the amount of salary debited to P&L account. Ayush is normally posted in Delhi towards the headquarters of SLLP. People, this is a payment of cash. So this is 48.3. Therefore 48.3. Now for those who remember 48.3, exception to the rule, people. The rule comes and says if you have been deputed in a location other than your base location for more than 15 days and you don't have a bank account in that state, you will be allowed payments in cash. You'll be allowed payments in cash. Check. No, I am normally deputed in Delhi, moved to Mumbai, where I don't have a bank account. I don't know how you don't have a bank account in Mumbai, but okay. Okay, so he does not have a bank account in Mumbai, which is more than 15 days, and therefore this is an exception to the rule. Therefore, ignore information. Therefore, ignore. When you're more than 15 days, it's allowed. That is what the point is, no? At least 15 days எழுதிருக்காங்க. They've written at least 15 days you should have been deputed. I am deputed for, therefore allowed. Logically, yes. See, people, okay, I'm not questioning this, but let's say for a simple example, I'm telling you that imagine I have a bank account, okay? Now the bank account is in this bank on this Ega theatre ke bagal mein. There is this bank called TNB Bank. Tamil Nadu Bank. Yes, now obviously Tamil Nadu Bank is not going to be in Mumbai. In that case, payment is allowed in cash also. Yes, now I'm being hypothetical here, people. I'm being very hypothetical here. It makes no sense that Mumbai will not have that bank account. Even if Mumbai does not have a bank account, it does not mean that you cannot do GPay and all right now. So it likes kind of stupid, but you know, stupidity is what ICA works with. So yeah. Next, amount of 25,000 was paid towards penalty for non-fulfillment of delivery conditions of a contract of sale for reasons beyond its control. I paid penalty under a contract. This is ignored. I only am disallowing penalties under offense of a law. The LLP has provided an amount of 18 lakh rupees being the sum estimated as payable to workers based on agreement for periodical wage revision. मेरे को पढ़ना भी नहीं है. This is ignore. Same thing is getting repeated again and again. Yes, depreciation debited to P&L is 5 lakh 40. I am disallowing. Gratuity provision based on actual valuation is 6.5. Gratuity actually paid is 4 lakhs. Take 2.5 to be disallowed. Profit on sale of shares of T Limited is 127,500. These shares were T Limited क्या है? The 150 equity shares case, which means nowhere it is given this is my wholly owned subsidiary. Nowhere it is given it's my wholly owned subsidiary, so I'm holding back information. Check, no, it says profit on sale of T Limited is 1,27,500. Shares were sold on 31st May 2021. Hey, this is 2024. The shares were sold on 31st May 2024 for 2,750. Highest price quoted on 2018 was 2,500 per share. Shares are 112A. Shares are 112A. You have to do FMB or FVOC, whichever is lower. Therefore, 2,500. I acquired it for a price of 1,900, whichever is. Therefore, 2,500 becomes my cost of acquisition. Sale value is minus 2,500 into 150 shares. Into 150 shares is my long term capital gains, but that is under CG. But that is under CG, people. First come to PGBP. First come to PGBP. Under PGBP, what are you doing? You are minus 127,500. You will minus 127,500 under PGBP, and under CG you will report 37,500. You will report under CG. 37,500 you will report under CG. Agreed? Agreed? Everyone? Yes. Yes. Repairs to plant and machinery includes 59,000 in respect of plant and machinery given on lease. Why? Why? Very good. It's an IFOS expense. People, I just now leased my premises on rent. This is an expense incurred for the leasing part of it. For the leasing part of it, which means where the income is sitting in IFOS, the expense should also sit in IFOS. So I am disallowing it under, reducing it under. People, can I claim it under IFOS? Yes, because I am not doing 30% deduction. I'm not doing 30% deduction. So normal expenses wholly and exclusively allowed as deduction. Yes or no? So 6 lakhs what I reported in IFOS, I will reduce kitna hai? 59,000 and balance will be reported. Why is this a capital expenditure? Where does it say it's capital? It's a repairs, no? What do you want to assume? Why is it repairs? Why do you take that kind of assumptions? You want to claim 10% of this when you can claim the whole 100%. Take care. You want to claim 15% and you can claim the whole 100%. If it is a capital repairs, ideally ICI will give it to you. And that comes the critical question. If it was a capital repair from an accounting perspective, why did you book into P&L first of all? As a CA, I would first like to qualify your opinion. Pada. Factory license fees paid of 15,000 rupees for each factory building. People, this is also same as above. So therefore, first disallow in PGBP and take it to OS. Take it to OS. That is what will be done. Yes. Next, legal fees includes 26,000 paid to an advocate for drafting and registering the lease agreement. Same logic. So again, take it from PGBP and move it to OS. All these items to be claimed under OS. All these are information given in the statement. Let's check my additional information. It says, under an agreement of debt restructuring, the bank has converted unpaid interest amounting to 9 lakhs on 31st July 2024 into a new loan account repayable in 3 annual installments. The first installment was paid in March 25 by debiting new loan account. People, I had some unpaid interest, which I am assuming would have been disallowed earlier. Current year I have paid only. Therefore, but here's the question, people. It says the bank has converted unpaid interest amounting to 9 lakhs on 31st July in loan repayable in first installments. My question is, this 9 lakh rupees of interest which you're seeing, is it of past years or current year? So up to means middle of the year, no? So is it from April to July, or is it before April also? When did this thing happen? It happened on 1st April 24. So two things can happen, people. Either you can make an assumption that the 9 lakhs is part of current year's expense, in which case you will first have to disallow 9 lakhs and then claim 3 lakhs. Or assumption number 2, you can come and say 9 lakhs was not even part of P&L, in which case you'll only claim. Choice. That's what even I'm telling. That's what I said. You can make. Take a choice. Take a choice. Take a choice. Answer is. They have ignored it, and they've only claimed 3 lakhs. They've ignored it and they've only claimed 3 lakhs. They have not disallowed the 9 lakhs. They've not disallowed the 9 lakhs, which I don't know, people, kind of look stupid, because then 31st July, what happened to that interest? At certain point of time, I stopped telling people that, the course is difficult. Yes, at certain point of time, I started telling papers are difficult, because maybe you know tax, but you just don't know how much to write English. That's it. Yes, Mr. Bharat, being a working partner, has bought a car which is registered in his own name out of the funds of LLP. The car was exclusively used for the business of LLP only. The depreciation on the car is 15,000 rupees for the previous year 24-25. People, car is used for business, but the car is not in the name of company. The car is in the name of partner. Question to you: can depreciation be claimed by the company? Yes. We discussed it. Case law called ICDS Limited. Case law called as ICDS Limited, where ICDS Limited came and said even if the car is registered in the name of the partners, depreciation can be claimed by the company. Therefore, this is allowed. Next, depreciation as per income tax rules is 8,10,000, including the depreciation on assets given on lease of 90,000 rupees. It does not include depreciation on car. People, I have a problem here. The depreciation which is given on lease cannot be claimed under PGBP, should be claimed under IFOS. So what will I do? I'll take 8,10,000 minus 90,000 under PGBP, and under OS I'll claim 90,000. I think I asked this question very long back to you people. Can you claim depreciations under OS? Can you claim depreciations under OS? Yes, you can do that. Yes, you can do that. It is perfectly allowed. It is perfectly allowed. There is no such rule which comes and says that if you have an asset in your personal capacity but is being used for generating other sources, you can claim depreciation on that also, people. A lot of people do that. A lot of people, or probably should be doing it. Yes, should be doing it. If you don't have a business also, people, does not mean that what assets you have are not eligible for depreciation, as long as you can prove that those assets were used for generating your other sources, you can claim depreciation on those also. Try and go and check your ITR. Your ITR itself will show you a line item called depreciation for you to claim. You can randomly put numbers, and the beauty of that is that you don't even have to prepare the block sheet. You don't even have to prepare the block sheet. What number you put is the final answer. Yes, they have not even come and confirmed that you have to do depreciation as per 32. So put some number you want, it doesn't matter. Obviously. Yes. Next, the LLP has sold import entitlement license for 1,50,000. The sum is not included in P&L as it is treated as capital receipt. People have received sale profit from import entitlement license, but I have not booked it in my P&L because I feel this is capital receipt. This is because, very good, charging section comes and confirms any profit on sale of import entitlement license is also a taxable PGBP component. Since it is not part of P&L, I am now including it in my P&L. I am now including it in my P&L. You are required to discuss the implications. So people compute your PGBP, arrive at your book profits. Arrive at your book profits. You will get a book profit of 26,70,000. For the first 6 lakhs, you'll do a computation. For the balance, you'll do a computation. You'll find that your allowed amount is getting restricted accordingly. You get a PGBP, then you do your capital gains again under 112A. Your other sources, let's check. No, I'm removing my whole repairs. I'm removing the factory license, legal fees, and also depreciation as being removed off in order to arrive at my final computation. A very beautiful question, people. Yes, it has enough number of adjustments and everything. I think this is a good question for you to look into before exams. Please to do that. Yes, 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 yes. Great. Enough discussions, people. Last two questions we are solving. The latest questions, people. I am looking at KMP Constructions Limited, an Indian company who's engaged in the business of executing civil contracts awarded by various companies, central governments and state governments in relation to infrastructure facility. So I have a company which is engaged in executing civil contracts. The P&L has given you information of 85 lakhs after debiting and crediting the following items. Ignoring all those items, I'm looking at the bottom. I'm looking at the bottom, which says compute the total income of KMP Constructions Limited for 25-26, indicating the reasons of each statement and ignoring the provisions of MAT computation. Assuming that the company does not opt for 115BAA, the due date of return filing has been taken at 30th November 25 because the company is entering into international transactions. Keeping that thought in mind, people. This is the first question I picked from MTP. A beautiful question. For the first time, ICI picked and prepared an MTP related question. Let's see what kind of complications come in the question. Question says, statement of P&L is 95 lakh rupees. Following adjustments have been made in the P&L. Adjustment number 1 comes and says an interest of 3 lakh rupees is due to public financial institutions for the last quarter of the financial statement is paid on 20th December 2025. Section to be 6 lakhs is paid to Mr. George, a non-resident, towards FTS without deduction of TDS. TDS was, however, deducted and paid on 30th December 2025. Section 40I to be disallowed. Amount disallowance full 100%. Point number 3. Damages amounting to 15 lakhs is paid to Government of Gujarat as per terms of contract for a defect found in construction of a flyover after 5 years of its construction. This is, ignore, people, this is a penalty payment under a contract. It is not an offense of a law. Just because you pay to government does not mean everything is disallowed. Next, depreciation charged is 20 lakh rupees to be disallowed. Mark to market losses amounting to 6 lakh rupees in respect of an unsettled derivative contract. The contract was settled in May 2025, I think. Yeah, May 2025 with the gains of 1 lakh rupees. May 2025 with the gains of 1 lakh rupees. This is 25. Because ICDS says mark to market losses are only to be recognized on settlement for some cases, highly probable forecast transactions, or Read. Go read. Firm commitments. Yes, MTM losses are only to be treated on settlement basis for two components, which is firm settlement or highly probable forecast transactions. Every other MTM losses are allowed on accrual basis. Every other losses are allowed on accrual basis. Now you need to make a choice whether this is allowed or not allowed. You tell me, is it allowed or not allowed? Go find, where is it in the books? ICDS chapter, people. ICDS number 6. Which items? Speculation, trading, hedging. Hey, there is something called highly probable transaction and all killer. Firm commitment, highly probable forecast transactions, and speculation tradings. These are all on settlement basis. Everything else is allowed on accrual basis. Yes, if you notice this line very carefully, people, it says in respect of a unsettled derivative, which means this is more like a forecast transaction. It's more like a forecast transaction. Therefore, this is allowed only on settlement basis and therefore gets disallowed. Where is fair valuations? What do you do M2M for? M2M is not fair valuation. M2M is also there in accounting standards. It's not just there in India's. That is based on prudence concept. It's not fair valuation. No, we don't. No, we don't. Accounting standards requires you that if there is an MTM loss, you have to book it. If there is an MTM gains, you will reverse it provided you have already booked an loss in the past. So if you have MTM gain in the first go, you will never book it. That is India's fair valuation. I'm talking about. It is, that's what I'm saying. Understand, Sehul, what happens is accounting standards also come and tell you that when you have a derivative contract, MTM losses will be recognized. If there is an MTM loss, recognize it based on prudence. And if there is an MTM gain, you will recognize it as revenue only if you have booked additional losses in the past, right? So this is not as per fair valuation concept. It is done as per AS 11 or whatever it is. It is done as per AS 11 itself. It is done as per AS 11 itself. Here is income tax coming and telling you that MTM loss or gains is allowed as a deduction, as long as it is not from speculations, firm commitments, or highly probable transactions, because that is a case where you are actually doing trades, hedgings. That is where I have a problem because I'm doing it on settlement. Other than that, people, if you technically notice, most of the companies, or at least big companies, will always have a derivative contract done into picture, and their MTM losses will be allowed as deduction on accrual basis. They will be allowed on accrual basis. The three items which you see, the speculation and everything, is something which only is done by people who are into trading business. So this is a case of not allowed case because it's an unsettled derivative contract. I'm doing a speculation here. Yes. Check your balance sheets, people. You will see it. Most of the companies, at least big companies, check their balance sheets. They will have MTM losses reported. But you will not be disallowing it in income tax computations. Your company would have not, your tax firm would not be allowing it on accrual basis. They will be allowing it. They'll be allowing it because it's not from a speculation transaction. Yes. Next, profits of 10 lakh rupees on sale of land to N Inc. USA, which is a wholly owned subsidiary company. First, reduce from PGBP. Good enough. In CG, for those who remember, it says 47 will not apply. 47 will not apply because the recipient entity should be an Indian company, which means it is taxable under CG. It is taxable under CG. Very carefully notice the points in 47. It only applies in case the recipient is a Indian company. Next, retention money amounting to 10 lakh rupees is held by a public sector undertaking which can be released after expiry of 2 years on the satisfaction of certain performance criteria as per the terms of contracts. I series 3. Tell me, taxable, not taxable? I've received, there is a retention money, people. I have not received the money because they're saying I'll give it after 2 years, which means I have not booked it in my P&L. Should I or should I not? Should I or should I not? I should book it in my P&L. Retention money is taxable because amount was already accrued. This is merely being held back. Does not change the format. I series 3 applies. I series 3 applies. Sorry? Enge. It says held by a public sector undertaking. They've already credited. There is no implications on this. See, okay, I'm talking from the fact that it is to be taken as income. I'm taking from the fact that it's to be taken as income. Next, 3 lakhs being interest on fixed deposits made with the bank as margin money for obtaining guarantee required by a state government for a particular contract. People have interest on FD, but this FD was not created out of my own will. It was done based on a force of a contract. Based on a force of a contract. The only question to be answered here is whether it is PGBP or IFOS. This is very good. So therefore, ignore information. Therefore, ignore information. We discussed the case law on this also, people. We discussed the case law on this also. Okay, I don't remember the name. Yes, it's on my head, but it's just not coming out properly. Yes, there is a case law which is under PGBP, which comes and says that any interest money from margins where it is held by the government is taxable under PGBP because it's a force of contract and not an incidental income. Next, income of 10 lakh rupees is received from real estate investment trust, the breakup of which is given to you. People, REIT provisions, quickly remember. No. Only 3 incomes are taxable to investor. Rental income, interest from SPV, dividends from SPV provided SPV is taxed under concessional regime. Only these 3 incomes are taxable. Everything else will be taxable in the hands of REIT. So REIT has given me 10 lakh rupees. People, the component breakup is as follows. Component of short-term capital gains on sale of development properties by REIT is 6 lakh rupees. People, this income is taxable in the hands of REIT. It's taxable in the hands of REIT, which means in the hands of company it is exempt. It is exempt, so I'm reducing 6 lakhs. Then component of rental income from properties owned by REIT, 4 lakhs to be taxed in the hands of investor. Therefore, ignore of. Yes or no? Yes, other informations are given to you. Now, people, you can either ignore it or probably, I don't know, you can also put it in IFOS. It's your choice. Because you may come and say it's not your business. In which case you will remove it from PGBP and take it to IFOS. That is also possible. Your choice. Next, other information given to you, people. Depreciation as per income tax rules is 25. Take it as minus. Land sold to N-Inc. What N-Inc? My US company was acquired at a cost of 30 lakh rupees on 25 May 2020. Value assessed by stamp value authorities 50 lakh rupees. People, sale of immovable property. When did the sale happen? No information given on the sale. Assuming sale take place after 23rd July, and therefore there will be no indexation benefits. Also notice for the fact, people, that even though the property is an immobile and sold after 23rd July, you will not check tax whichever is lower, because that is only for individuals. This is a company, which means here flat without indexation. I acquired it for 30 lakhs. I made a profit of 10 lakhs, which means I sold it for 40 lakhs. I should have sold it for 50 lakhs. Income tax will take 50 lakhs as my full value of consideration. My cost becomes 30, and therefore profit becomes 20 under CG. Yes, the critical one is this one, people. 18 new employees have been employed during the previous year. The details are given to you. I'm going to read each class. You're going to tell me whether this class is eligible or not eligible. Focus attention on the fact that, people, the entity is into constructions. So therefore It is only 240 days. It is only 240 days. Next, what are the employees, people? 15 employees, April, regular, 24,000. Eligible, not eligible? 25 employees, 15, regular, 26,000. Not eligible because 32 September, August, casual, 24,500. The question says regular employees are participating in RPF, casual is not eligible because no PF. No PF. Last one is 10th September, regular, 24,000. Check no, September, October, November, December, January, February, March, 7 months becomes 210. I want 2. Therefore, only eligible is 15 into 24,000 into 12 into 30% into 30%. 12 lakh 96,000. 12,96,000 is your deduction under 80JJAA. You are required to compute the construction income of KMP along with the treatment of each item, ignoring the provisions of 115BAA. This is what the question says. This is what the question says. Any doubts on the question, people? No? Can we write down quickly? Yes. Let's try this out. Let's see what the format looks like. Let's see what the format looks like. Hey, how many questions? 7. Take 7 we are discussing, 8 will do. 7 looks weird, so we'll do 7. Yes, yes, let's try this out, people. Let's try this out. We are doing computation of total income of total income of KMP Construction Limited for the assessment year 25-26. For the assessment year 25-26, people, before you start questions like these, always first try to figure out how many heads you have. That helps you do better. Yes, if I'm checking, one thing is very sure, I have PGBP. Yes, and then because of this N-Inc, I have CG, and then I have, do I have IFOS? I don't have IFOS. Yes, unless and until you make an assumption that you want REIT moving there. Yes, if I don't have REIT moving there, then it's no IFOS, which means 2 heads of income for me to follow. The reason I'm asking you this to do this, people, is because the template has to be maintained properly. Yes, as you remember, we discussed earlier, people, when you have multiple heads of income, it's always better to have particulars with 3 columns. It's always better to have particulars with 3 columns. Go forward, particulars with 3 columns. You're starting with net profit. You're starting with net profit as per P&L. Net profit as per P&L. People, the rules are very simple. Column number 1 will talk about all adjustments to happen inside a head. Column number 2 will talk about all final answers of that head. And column number 3 will talk about all the final numbers of the heads. Final numbers of the heads. This is a P&L. Do you make any adjustments in this? No. Put it in second column. Put it in second column. Number becomes 85 lakhs. As you keep putting it, I'm going to mark it out. I'm going to mark it out as we move forward. People, 2 options to present, like I discussed earlier also. Either first put all pluses and then put all minuses, or you can serial number wise plus and minuses. Serial number wise plus and minuses. What do you prefer? Okay, let's do add slash less. Add slash less adjustments to net profit. Add slash less adjustments to net profit. People, if you're doing it serial number wise, you have to ensure that you mention the serial number appropriately, because only then will get marks. Only then will you get marks. Yes. So as we keep discussing every item, you're going to put the serial number, then put the item. Then put the item. People, item number 1. Item number 1, put it as A. Put it as A. Always to start this, people, you first need a side heading, not more than 3 words, not more than 3 words, and then provision, analysis, conclusion. Template remains the same. Give me 3 words. Interest to PFI. Interest to PFI. Interest to PFI. Try. Try. What do you write? People, let's also be candid about the fact that when you talk about 43B, 43B does not just have interest. It has multiple things. So if you say as per section 43B interest, then you're telling that section 43B only talks about interest. Okay, you can go Greek words and you can use inter alia and everything. Yes, or you can say section 43B. वो भी same ही है. You can start with saying section 43B states that interest paid to PFI. When you use it that way, that means you're coming and saying apart amongst the items of 43B, this is also there. This is also there. If you want to flaunt, then it is section 43B inter alia mentions interest paid to PFIs will only be allowed as deduction provided they are paid on or before. Your choice, people. Any words is fine for me. You want the simpler one? Simpler one. Section 43B. Section 43B provides that. Section 43B provides that any interest paid to PFIs. Section 43B provides that any interest paid to PFIs can be claimed as deduction. Can be claimed as deduction only if it is paid on or before the due date of return filing. On or before the due date of return filing. Open brackets. Open brackets. People, in this question alone, we have to pay attention to that because they have taken a different due date. They've taken a different due date. So open brackets and put VIZ. Kya hai VIZ? Which is, yes, open brackets and small letters le VIZ dot 30 November 2025. 30 November 2025. Close brackets. Close brackets. This is your provisions, people. Now we need to write analysis. Facts and analysis can be together. उतना नहीं चाहिए. Since rupees 3 lakhs has been paid only on since rupees 3 lakhs has only been paid on 20 December 2025. 20 December 2025. It shall not be allowed as deduction. It shall not be allowed as deduction. This is your analysis. Conclude. No. You're repeating the same thing again. I want something better. As the number is debited to P&L. Number maybe is not a good word. As the sum is debited to P&L, it has to be added back. It has to be added back. Number is first column. Number is first column 3 lakhs. Number is first column 3 lakhs. Move forward. Point number B. Point number B. Give me a side heading. Good enough. No. Never give the provision in the heading. Either you can say payment to George or payment to non-resident or FTS to George, whatever makes sense to you. Any heading is fine. Yes, yes, 3 paras, people. 3 paras. When you don't know the section, that's the easier thing to do. As per section 40 AI, as per section 40 AI, as per section 40 AI, it's 40 bracket A and then bracket small I. As per section 40 AI, payments to non-residents. हाँ, क्या? हाँ, ओके, वो सब इतना नहीं चाहिए. हाँ, directly. Payments to non-residents shall not be allowed as deduction. Payments to non-residents shall not be allowed as deduction if TDS has not been deducted. TDS has not been deducted before the previous year. TDS has not been deducted before the previous year. People, I told you 2 conditions are there. First you deduct, then you pay. This is a case of non-deduction itself. So I'm stopping there itself. Yes, where TDS is not deducted before the previous year. Full stop. Next line. Huh. Huh. Every time is since nahi aayega. People, the thing about English is you can always keep changing words. इतना English भी नहीं चाहिए. I don't know. As FTS was paid to Mr. George. As FTS was paid to Mr. George without deduction of TDS. As payment was made to Mr. George without deduction of TDS. It shall be disallowed. Mano wants to write big English. It shall be disallowed. Hey, you've already used since. We asked, no? What did you use? As or since? Second line, what did you use? You did as. So this one is. There used since. There used as. So this one is since. People, in first one, what did you do? Then you did as. So now you're doing as, and then for since. Go for change of English, people. Since the sum is debited to P&L, it shall be added back. Since the sum is debited to P&L, it shall be added back. Yes, people, that's how you play. Otherwise, it'll become very stagnant, right? So one para you write since and then as, and then second para you write as and then since. Yes, play around. At least I say I should feel like you're writing something fresh. Number is 6 lakhs. Move forward. Move forward. I want to see how will you write ignorance. पहले side heading. Sorry? Payment of damages itself with 3 words. I want to mention damages is to government. Damages to government. हाँ. हाँ, provision it talks about offense payment. Exactly. No, you have to talk about the fact that 37 says offense of payment of law is not allowed. Since this is not an offense of law, therefore it is allowed. அந்த மாதிரி. Try whatever English works for you, people. Try whatever English works for you. Let's try. Section 37. Section 37 restricts the allowability of. Section 37 restricts the allowability of payment for any offense. Section 37 restricts allowability of any payment of, restricts allowability of payment of any offense under a law. Under a law. Full stop, continue. In the given case, I will try Manav's way. In the given case, in the given case, payment to government of Gujarat, payment to government of Gujarat, the payment to government of Gujarat is under a terms of contract. Payment to government of Gujarat is under the terms of a contract. Is under the terms of the contract, and hence is not covered above. इतना क्यों डिटेल जाना है? And hence is not covered above. This is your conclusion, people. Finalize. Since it is already debited to P&L, since it is already debited to P&L, since it is already debited to P&L, no further adjustments, no further adjustments is required. Since it is already debited to P&L, no further adjustments is required. क्या चल रहा है? हाँ, item number is, amount is dash, amount is dash. Yes, move forward. Point number D. You don't need to put anything here, people. Just put depreciation. Just put depreciation hyphen disallowed. Depreciation hyphen disallowed as to be recomputed as per income tax rules. Has to be recomputed under income tax rules. Yes, amount is, move forward. Point number E. Heading can be just simple MTM losses. It's 1 red with 6. 1 red with 6. क्या करना? Let's just see. You don't need to go detail. When you know it's disallowed, just put it as MTM losses other than those covered in. ICDS is not allowed. MTM loss, क्या लिखना था, सॉरी, हाँ, MTM loss is only allowed, क्या लिखा तूने, हाँ, MTM loss other than those covered in ICDS is not allowed. MTM loss other than those covered in ICDS is not allowed, full stop. As the sum of 6 lakhs, as the sum of 6 lakhs forms part of P&L, done. The conclusion remains the same always, people. Shall we? Yes, yes. Point number F. People, the thing about point number F, if you notice, is that I don't have to write big English in PGBP. I only need to write it in CG. So let's keep it very simple in PGBP. Yes, point number F. Heading is sale of land. Heading is sale of land. Yes, yes, yes. Next line says to be taxed under capital gains. To be taxed under capital gains. To be taxed under capital gains. Full stop. Continue. Thus, profit forming part of P&L. Thus, profit forming part of P&L needs to be. Thus, profit forming part of P&L needs to be reduced, claimed, whatever it is. Profits forming part of P&L needs to be reduced, claimed. Yes, this number in the second column will show in the first column will show in brackets. Please show it in brackets. Please show it in brackets. Move on forward, people, quickly. Point number G. Point number G. Sorry. Go for it. Go for it. What will you write? As per ICDS 3. As per ICDS 3, retention money is taxable. As per ICDS 3, retention money is taxable. Is taxable based on percentage of completion method. Retention money is taxable based on percentage of completion method. Regardless of it, based on percentage of completion method, regardless of it being withheld. Regardless of it being withheld. Full stop. Continue. Conclude it, that's it. You don't need analysis, just conclude it. Considering the, just giving you different English people so that you can use whatever you want. Considering the sum is already credited to P&L. Considering the sum is already credited to P&L. No further adjustment is required. Considering the sum is already credited to P&L, no further adjustment is required. Amount becomes 0. Amount becomes 0. Yes, point number H. What will you say? FD held as margin money is better. Because the whole intention is to call it margin money, right? That is what is the critical part. So I want that word to be important. FD held as margin money. This is less about plus and minus, people. This is about taxability. So you have to use different English. Will be sorry, because 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 it is. If it was incidental, why would you put it here? As the deposit was made, for satisfaction of a, as the deposit was made for the satisfaction of a business contract, as the deposit was made for the satisfaction of a business contract, comma, the interest income arising from the same, will continue to be taxable under, PGBP. Will continue to be taxable under PGBP. Now, people, if you know the case law, good, refer it. If you don't know the case law, don't take a chance. For those who want to refer the case law, people, how do you refer it? Open brackets, and then it is called RE. Open brackets, call it RE, 2 dots, RE 2 dots, CIT versus K and Co. RE with 2 dots, CIT versus K and Co, close brackets. People, I do not expect that you will remember what is the citation, the page number, the volume number and all, and it is okay even if you don't remember what quote it is. If you remember the quote, then what you can do, RE, CIT versus K and Co, open brackets, Supreme Court, close brackets. Yes, that is what you can do. Other than that, people showing off relating 239, ITR 451 and all, don't do. Yes, one small number mistake, they will cut out the whole answer. Don't try that. Neither do you remember, nor do I remember. Even I don't care. Even you should not care. Yes. Conclude this. What will write? Since, as, whatever it is. Since the interest is already part of net profit. हाँ हाँ हाँ, no further adjustment is required. Since the interest is part of net profit, no further adjustment is required. Amount becomes zero. Amount becomes zero. Amount becomes zero. Point number I. Point number I. Give me heading. Income from REIT. Point number I. Income from REIT. Income from REIT. Huh. People, since there are two things, let's do one thing. Let's first write the provision and conclude in a single shot. And conclude in a single shot. What is the provision? As per the provisions of income tax. As per the provisions of income tax. As per the provisions of income tax. An investor of REIT. An investor of REIT shall only be taxable for an investor for REIT shall only be taxable for rental income from properties, shall only be taxable for rental income from properties owned by REIT, shall only be taxable for rental income from properties owned by REIT, comma, interest income from SPV, interest income from SPV, and specified dividends. Yes. Ideally, if the question had dividends, I would have elaborated what this is. Otherwise, I don't care. Yes, and specified dividends. And specified dividends. Next line. Next line. In the present case. In the present case. The short-term capital, the income relating to short-term capital gains, STCG is fine. The income relating to STCG earned by REIT, the income relating to STCG earned by REIT will be taxable in the hands of REIT, will be taxable in the hands of REIT, and therefore is exempt, and therefore is exempt for the assessee, and therefore is exempt for assessee, and therefore is exempt for the assessee. Next line. Therefore the gains of rupees 6 lakh, therefore the gains of rupees 6 lakhs forming part of P&L, therefore the gains of rupees 6 lakh forming part of P&L shall be reduced. Therefore the gains of rupees 6 lakh forming part of P&L shall be reduced. In the first column, number becomes minus 6 lakhs, minus 6 lakhs. Next line itself, people, next line what will you write? Next line what you'll write? No adjustment is required for rental income. No adjustment is required for rental income, as the same is taxable for the assessee. No adjustment is required for the rental income, as the same is taxable for the assessee. as the same is taxable for the assessee. Done, done, done. People, is my depreciation done? Sorry, is my PGBP done? Is my PGBP done? No, I still have one component left, people, which is my depreciation. So let's quickly take the last one. People, here what will you do? What will you refer it as? I told you have to have on the left side the reference. Yes, put it as OI within bracket 1. Put it as OI within bracket I. Yes, I told you people, every item you're writing should have a reference to the same thing given in the question. Should have a reference to the same thing given in the question. Only then I say will give you marks. Yes, so put it as OI within bracket I. OI within bracket I. Heading says depreciation as per income tax. You don't need to mention anything, people, because I've already referred it on the top. Yes, so just mention it as depreciation as per income tax. Amount becomes 25 in brackets. Amount becomes 25 in brackets. I don't think anything else in PGBP, people. Nothing? Give me the final answer. Total the number and put it in second column. Total number and put in second column. Sorry, 80? Negative 6 lakhs overall. Adjustments only. Negative 6 lakhs. Adjustments become negative 6 lakhs. Next line says PGBP. Next line says PGBP, and the final answer goes to the last column. Yes, yes. Roman number 2. Roman number 2 heading is called capital gains. Roman number 2 heading is called capital gains. Yes, yes. Under that heading is sale of land. Heading is sale of land to N Inc. Sale of land to N Inc. Yes. Now, people, I am not putting a serial number for two reasons, because I see the profit. It's reported in F also. It's reported in 2 also. So it's too confusing. So I don't want to do that. Yes. So I'm putting it as sale of land to N Inc. Sale of land to N Inc. First, write the provisions before you start writing format. People, why are we taxing this first of all? Next line. Next line. Next line. Though N Inc. is a wholly owned subsidiary. Though N Inc. is a wholly owned subsidiary. Though N Inc. is a wholly owned subsidiary, the profit arising from the sale of land to N Inc. The profit arising from the sale of land to N Inc. will be taxable. The profit arising from the sale of land to N Inc. will be taxable, since N Inc. is not an Indian company. Since N Inc. is not a Indian company, and the benefits of 47 will not be available, and the benefits of section 47 will not be available, and the benefits of section 47 will not be available. Yes, then it's a simple thing, people. Go forward. Next line says FVOC. Next line says FVOC, open brackets, number is hey, acha, FVOC. So next line, sorry, FVOC, next line, FVOC, next line, SDV, next line, SDV, 50 lakhs, next line, SDV, 50 lakhs, uske next line, actual consideration, open brackets, it is 30 lakhs plus 10 lakhs. It is 30 lakhs plus 10 lakhs. Whichever is higher, go for it. Whichever is higher, the number goes into the first column. Number is 50 lakhs. Number is 50 lakhs. Next line, less COA, less COA. Number is 30 lakhs in first column in brackets. Number is 30 lakhs in first column in brackets. We'll come to that. Yes, total number, bring it to the last column. Number is 20 lakhs. Number is 20 lakhs. In the particulars again, people, come down. You have written 20 lakhs. Yes, the 20 lakhs will be referred as LTCG. The numbers will be referred as LTCG under section 112. LTCG under section 112. Yes. Next line. Open brackets. Next line, open brackets. In the absence of information. Open brackets. In the absence of information, it is assumed that transfer took place. In the absence of information, it is assumed as the transfer took place on or after 23rd July 2024. On or after 23rd July 2024, and therefore no indexation is considered, done. Total the last column, bring me what is called as GTI. Bring me what is called as GTI. Number is 99 lakhs. Less chapter 6A deductions. Less chapter 6A deductions. Less chapter 6A deductions. Under that section 80 JJAA a number, हाँ तो लिखो section 80 open brackets, it is 15 into 24,000 into 30%. 15 into 24,000 into 30%. 15 into 24,000 into 30% into 12 also. It is 15 into 24,000 into 12 into 30%. Yes, yes, number is directly 12,96,000 in brackets. Get the total income. People, my total income is 86 lakh 4,000. My total income is 86 lakh 4,000. Come to the bottom and put a note. Come to the bottom and put a note. Come to the bottom and put a note for the purpose of 80 JJAA. For the purpose of 80 JJAA. The employees, the 25 employees, have not been considered. The 25 employees have not been considered as their emoluments exceed 25,000. As their emoluments exceed 25,000. Full stop. 32 employees are not considered. 32 employees are not considered as they don't contribute to PF. As they don't contribute to PF. Also, the 10 employees have been deferred. Also, the 10 employees have been deferred since they have not been employed for 240 days. Since they have not been employed for 240 days. This is your 15 marks. This is your 15 marks. Clear? Yes, yes, yes. Like I said, people, there is no right and wrong template when it comes to your compulsory question. Yes, any English you write makes sense as long as you are satisfied, they are satisfied. Yes, but to complete the English, people, certain things have to be kept in mind. Yes, you cannot let go of the reference, you cannot let go of the side headings, you cannot ignore the template format. You have to write the provision, you have to write the analysis, and then give the treatment. Three steps have to be followed, no matter what type you write it, whether you combine the 3 into 1, make it into 2, make it into 4, it doesn't matter, but the template remains the same. Without any of the 3, you cannot proceed forward. Yes, so this is the bare minimum which you need to do from your exam perspective. Again, you cannot expect a whole 15 marks coming in exam, because there will be 1 or 2 adjustments you will go wrong. But if you keep it intact to this level, you can at least ensure that 15 ends up becoming 13 or 14 for the least. Yes, that still is good enough number. That still is a good enough number, rather than you just writing random numbers and I say only giving you 4 or 5 out of 15 because they did not find the reasoning for it. Yes, don't make that mistakes, people. That is the whole idea practice. Is that clear? Is that clear? Yes. क्या हो सेवल? लोग है क्या? Okay. Okay. People, this was a weird question which I probably put out not because it's complicated, but you know, the kind of information they gave in the question suddenly felt overwhelming for most of the students and they chose to ignore it off. But a beautiful set of question, people, which has no complications. If you understand this carefully, you can easily solve this off. Yes, look at question number 7. It says Lotus Limited is a listed company located in Jaipur. The company is engaged in multiple activities at different locations and the books of accounts are maintained for each unit separately. The head office is maintaining transactions of all these books in common nature. All the accounts are consolidated and the return of income is filed at Jaipur. Some story is given to you. Yes, the following information is furnished with respect to each unit. People, every unit is going to be assessed independently and we're going to find out what is the PGBP in each unit. Look at the items carefully. It says the company has reported a net profit of 200 lakhs in the books of accounts of the said business unit. It entered into an agreement for the use of know-how owned by a renowned scientist and has paid royalty at rupees 5 per unit of the medicine sold as royalty, and the amount of royalty paid is 36 lakhs. So I have some reported net profit, and in the reported net profit I have claimed 36 lakhs ka royalty expense. The company deducted tax at source of the amount up to December 24 and omitted to deduct tax at source on the royalty of 8 lakhs due for the period Jan to March. So they have missed TDS. The payee admitted the royalty income fully, paid tax and filed his return on or before the income due date specified in section 139(1). So they are saying there is a royalty default which has happened, but the person has reported the income, paid tax and filed his statement. People, even in that instance, the provision only comes and clarifies that you will get the claim in the year in which return is filed, which is happening next year. Which means for the current year at least, there is a disallowance. People, whom was the payment made to? It's just a scientist. They don't know whether it is resident or non-resident. Therefore, assume resident to be disallowed 30%. So which means you do nothing, people. Take 200 lakhs and disallow 2.4 lakhs and disallow 2.4 lakhs. That is what you'll do. Yes or no? Yes, because every other information is useless. So technically out of this whole table, the only thing to be kept in mind is you have to disallow 2.4 lakhs. 2.4 lakhs. Next, the company has paid 43,20,000 being 18% of the basic salary plus DA of the employees in notified pension scheme, and the amount so paid is debited to P&L account. I have paid 18%. I can only pay 14%. Reverse for get the number. So 43,20,000 is 18%. I want to know how much is 14%. 33,60,000. How much excess have I paid? This to be, which that's it. So which means for that big question, people, two adjustments to be made. One, 2.4 lakhs will get disallowed, and then 9.6 lakhs will get disallowed. So 2.4 will disallow here, 9.6 will get disallowed here. Your net profit is reported as 200 lakhs. 200 lakhs. This is what will happen. This is what will happen. Clear? Clear. Point number 2, people. I have some garment manufacturing unit. Company has a manufacturing unit at Tirupur, Tamil Nadu. Reported a net profit of 90 lakhs, which I am going to add. As per the books of accounts, it has brought a trademark from Mr. Yellow for 20 lakhs on 1st June, which is charged as expenditure in the books of accounts. People, I bought a intangible asset. I bought an intangible asset. Therefore, I will disallow first. And claim at the rate of, very good, at the rate of 25% because the asset is put to use for more than 180 days. So claim 25%. 1/4 of this becomes 5 lakhs. 1/4 of this becomes 5 lakhs. Agreed, not agreed? Agreed. Move forward. The unit paid 3 lakhs as interest on loan from a non-resident Indian. The tax was deducted at source in March 2025 but was remitted only on 6th May 2025. People, deduction happened in May. Deduction happened in March. Payment happened in May. You can make payment up to October. Therefore, ignore the information. No adjustment to be made. The company paid 6 lakh rupees being the amount of income tax payable by employees on non-monetary perquisites provided by the employees. Payment is debited to P&L. Does someone remember this provision? Nope. Nope. Section 40F5 comes and says when there is a tax on non-monetary perquisites, they are treated as exempt in the hands of employees and therefore is disallowed in the hands of employers. This number is to be disallowed. This number is to be disallowed. Tax on non-monetary perquisites exempt for employees, disallowed for employers. This is what the treatment is for point number B, business. Point number C, business, is a fertilizing production unit, people, where the company has established a fertilizing production unit in Narmada, Gujarat, which has become operational in 2024. It has acquired a land for 1 crore and put up a building for 3 crores and installed plant and machinery for 4 crores. Net profit is reported as 220 lakhs after deducting depreciation on building of 30 lakhs and plant and machinery of 60 lakhs. I'm not sure how many of you are aware. Fertilizer production unit is a specified business 3580, is a specified business 3580. So I will take my 220 lakhs, I will add back 30 lakhs and 60 lakhs. I am adding this back because I can claim my 100% deduction. My expenses incurred is 300 lakhs for building, 3 crores, 300 lakhs for building and 400 lakhs for plant and machinery. 400 lakhs for plant and machinery. Notice this is going to report a loss to be set off against specified business incomes. If not, carry forward for infinite years. Carry forward for infinite years. Warehousing for storage of edible oils in Chennai. Edible oils is not a specified business. Not a specified business. Specified business only covers agricultural produce and sugar. We have put a special blue box also. We have put a special blue box also. The special blue box says ICI's favorite edible oil is not covered. This is a normal business. Normal business. Established a warehousing facility for storage of edible oils on 1st June 24. Made investments such as cost of land 2 crores. I will ignore. Building of 3 crores. I will allow at the rate of plant and machinery new is 5 crores. I will allow 15%. Number becomes 75 lakhs. I will allow 75 lakhs. Net profit without deducting depreciation is given as 70 lakhs. So I will take 70 lakhs minus 30 lakhs minus 75 lakhs. I will also report a loss here. But this loss can be set off against my normal business incomes. My normal business incomes. That is what would happen, people. That is what would happen. Additional information says the company has mobilized capital during 24-25 for public issue of shares. Application money was kept in bank pending allotment of shares. Interest income from the said deposit is 3,20,000 and is credited to general reserve account. Nope. 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 People we discussed in IFOS. Case law comes and says when you have interest income coming from share application money, this can be directly reduced from the share issue expenses. This can be directly reduced from the share issue expenses and therefore no treatment in P&L. No treatment in P&L. The entry gets ignored. The entry gets ignored. Yes. Yes. Leave it off. The company declared interim dividend at the rate of 10% of share capital being 30 lakhs in October 2024. It has 27% shareholding in Wiring Singapore, from whom it received 54 lakhs as dividends in January 2025. Both dividends received and paid were credited and debited respectively in consolidated statement of P&L. People, my dividend which I received is there in the P&L. So therefore I will reduce from PGBP, take to IFOS, take to IFOS. So take from PGBP, move to IFOS. The dividends which I paid ideally should have never been debited to P&L, but they say they have debited to P&L, therefore I have to disallow how much? 54 lakhs. I have to disallow 54 lakhs. Also bear in mind, people, because it is IFOS income, I will report an IFOS income of 30 lakhs, but claim ATM for 30 lakhs, giving me 0. Giving me 0. Yes or no? So what is the treatment, people? In PGBP, I will reduce 30 lakhs. In OS, I will add 30 lakhs. I will disallow 54 lakhs in my PGBP and finally go to IFOS, report 30 minus 30, make it 0. 30 minus 30 and make it 0. Is this clear for everyone? Is this clear for everyone? Yes, yes, yes. Go forward. Total turnover of the company is 282 crores and 23-24 is 405. Hey, my relevance 22-23. So I'm looking at 282 crores. Therefore, I am 25%. The company has a MAT credit of 20 lakhs for 12-13. Hey, check. No. 15 years. 15 years. Add another 15 to 13 becomes 28. 28. You are in 25, 26. You're an assessment at 25, 26. You still have eligibility, which means this MAT credit can be set off provided the tax paid in normal is more. Hey, this is an indirect hint for you that you have to do MAT also in the question. This is an indirect hint for you that you have to do MAT also in the question. The only change in the MAT computation in the question, people, is that 35 AD will not be given to you. 35 AD will not be given to you, and all those TDS defaults and all you'll have to ignore. You'll have to ignore the book profit. Before you hurry, question itself has told you. Question itself has told you what your MAT is. What your MAT is. So you just have to take 620 lakhs multiply by 15% will become a MAT tax. Will become your MAT tax. Take your normal tax, take your MAT tax, check whichever is higher. If normal is higher, claim, but ensure credit should not reduce more than MAT tax. Credit should not reduce more than MAT tax. Check. No. If I take my total incomes, people, and I find my total income in the question is regular tax, I have 3.212 crores in my normal. I'm computing tax at the rate of 25 plus a surcharge of 7. I get a tax of 86,79,840. This is my normal tax. MAT, people, I had 6 crore 20 lakhs. I have done 15%. Surcharge of 7 with a cess of 4 becomes 1 crore 3 lakh 4940, which means I am at MAT. I am at MAT. When I'm already at MAT, people, can I use MAT credit? Ignore the MAT credit. But now you will get additional MAT credit of 1 crore 3 minus 86 will become my additional MAT credit, which is 16,69,200. So this will also get added to your normal MAT. Will get added to your normal MAT, but this MAT credit can be carried forward for a period of 15 years. That is what would happen. That is what would happen. Hey, but let's one second. Compute the total income and optimum income tax liability, which means they want you to check BAA also. They want you to check BAA also. You'll have to check it as per BAA also. The changes in BAA, people, you cannot claim 35 AD. But because you're not claiming 35 AD, you can claim normal depreciation. That is the only change you're going to make. That is the only change you're going to make. ATM is still eligible under BAA also. Yes, so you'll do it as per BAA also and check. The only two implications which will happen, people, because you're going for BAA, MAT is lost, meaning no MAT. But at the same time, credit is also gone forever. Credit is also gone forever. So when they compute it as per MAT, when they compute it as per 115 BAA, they got the normal Delhi as same, Tirupur as same, Narmada as same, warehousing facility they deleted off. They deleted off, and therefore they got a profit revision of 5.32 crores. They did as per 115 BAA, they got 1 crore 33 lakh 89,380. Now tell me, people, my special is showing. My MAT computation is showing 1 crore 3 lakh 49,040 to pay. 1 crore 3 lakh. Whereas special is saying pay 1 crore 33 lakh. I would like to pay normal computation along with MAT. I would like to pay normal computation along with MAT. For those who remember, people, we did a step. I told you it is normal or MAT, whichever is higher, compared with special, whichever is lower. So I will do that only. I will do that only because it is better to claim lower tax. It is better to claim lower tax. Is that clear? Yes. A very healthy question for you to solve and try, people. A very healthy question for you to solve and try. This was your compulsory question in one of the exams. I don't remember which exam it was, but a very good question. Yeah. Jan 21, I think I told you also earlier, people. Jan 21 was one of the worst attempts, whether in inter or in finals. The toughest of the questions were being tested in Jan 21. They literally screwed everyone's life off. Yes. So a good question for you to practice. A good question for you to practice. That leaves me with the last question, people, of Jan 21 once again. Now, why two Jan 21s are there? Very simple. They were running old syllabus and new syllabus parallelly. So one syllabus got that question and one syllabus got this question. Yes, yes. This one should be a fairly easy question, people. I don't expect much complications in this. But the only thing which I remember in this question probably should be that they want you to do tax payable as per the provisions of the act. Ignoring the provisions of MAT. Now I don't know what does this mean. Do they want special or normal is a question. Yes, is a question to be looked into. They have luckily only done normal, so we are safe. Yes, quickly people, everyone is going to point out and they're going to tell me what the answers are. Yes, I have Dinkar Synthetics engaged in the business of manufacturing of textiles, of suiting and shirting operations since 2012 with a reported net profit of 75 lakhs. Taking my net profit after debiting and crediting the following items, I have company used to include interest cost while calculating its stock of finished goods up to financial year 23-24. During 24-25, the company changed its accounting policy to adopt in accounting standard 2 as issued by Institute of Chartered Accountants of India, and thereby decided to exclude the interest cost while valuing finished goods. This has resulted in a decrease in the net profit by 13.5 lakhs. The policy is decided to be continued in the future. I will ignore information. I will ignore information. People, if you're following the standard practice of AS2, it means you're also following the practice of ICDS2, which is in line with the treatments, and therefore ignore information, and therefore ignore information. Yes, yes, yeah. So basically what has happened is people, borrowing cost standard comes and says if you have an asset, whatever interest cost you have, you can capitalize for the cost. Yes, but then they decided I want to follow AS2 or ICDS2, where they came and said because it's a stock in trade, I don't want to include the interest and separately charge it to P&L. Because they did that, what happened? Stock value fell, and that fall of stock, what you would have done earlier versus what you do now, will have a difference of 13.5 lakhs. Now if you notice this carefully, this 13.5 lakhs is merely going to be a timing difference. It's merely going to be a timing difference because either you book it in stock or you take it in P&L. So they are saying I have changed the method. Because I have changed the method, I am having a reported net profit of 13.5 less this year. Are you okay with me showing this much less, or do you want me to go back to my old policy? Are you okay? I'm okay because I'm following, which is in line with the ICDS2, so therefore I don't have a problem. Changes in method of accounting is always permissible. That's not an issue. Yes. Clear? Yes. Question number 2, people. It says company has made a provision for gratuity based on actual valuation. I don't even have to look into it. Answer is disallow 3.8 lakhs. Yes, I told you people, some adjustments will keep repeating itself. Next, the company has debited a P&L account one-time franchise fees of 20 lakhs paid to Robert Inc., a foreign company, for obtaining franchise on 16th August 24. Relevant amount of TDS has been deducted and deposited by the company in time. Very good. To be disallowed and claimed depreciation at the rate of 25%. Number is 5 lakhs. Sorry, 20 lakhs into 25%, 5 lakhs. Yes. People, sometimes what you're thinking may also not be correct. Yes, always focus on the first priority of items, which is whether it is capital or not, then move forward to other things. The company lost cash of 12 lakh rupees due to theft, which when it was withdrawn from the bank and taken to administrative office. It is not insured and hence the full amount has been charged to revenue expense. Kyun bhai? Why? Did you do the fraud? Did you do the fraud? Who did the fraud? There is no mention. It just says when you are coming back from the bank, someone stole your money. Did you do something illegal? Appo. 37. It's business money which is lost. It's incurring does not mean that you have to do it. Sometimes it happens. I'll put it this way: when you have loss of stock because of fire, are you allowing, not allowing it? When you have a loss of stock by fire, do you allow it, not allow it? Do you allow it or not allow it? Loss of stock by fire, you don't allow. Sehul, I have some stock in my factory. There is a fire in the factory, and therefore the goods are destroyed. Insurance is not going to give you anything. Will that loss be reported? Not reported. Because? Huh. 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 My closing stock is lower by that extent. No, no. Sehul, in accounts, loss by fire कहाँ report करते हो? मतलब you allow it or don't allow it? Hey. You allow it in accounts. Question in tax, do you allow or not allow? Is there a denial in account income tax somewhere to not allow it? Not that you can think of. Okay, imagine Rahul has given you a loan, working capital loan. Okay, and tomorrow Rahul comes and tells you, I don't want the loan back, which means Rahul is waiving the loan for you. Apo Rahul has done what? Waiver of loan. So for Rahul, it's a I will book it in P&L, not book it in P&L. Book it in P&L, allowed, not allowed. Because what to waive off your loan is my business. Okay, so I'm running a business and I lost some goods because of fire. My problem, not my problem. My problem. Business lost money, did not lose money. Business lost money. Can you not allow it? Is my stock going to be used for my personal purpose? My stock was going to be used for business purpose. So therefore, it is technically like me coming and saying I've given free samples out. Because I'm not going to use the stock anymore. So which means it's a free sample out. Apo, do you allow, not allow? You will allow. Think on same lines. Say, I have money which I'm going to use in my business. But unfortunately, when I was walking on the road, someone mugged me and took away all my money. Now this is my business cash, not my personal cash. Business cash which I was supposed to use in my business to generate profits. Now not there with me anymore. Is a loss, not a loss? Is a loss. Can be claimed, not can be claimed? Should be claimed. Unless and until you tell me you have done the fraud. If you tell me that my business itself is doing fraud, then it's a different conversation. Then it's an offense payment, right? But if you are not the one doing the fraud and it happened incidental to you, can you not say no to it? Right? Yes, people, this is a normal embezzlement in the sense that you have lost money off your business. Incurrence does not necessarily mean that you have to do it. Incurrence also means that it may happen. It may happen, and that is still good enough as an expense. That is still good enough as an expense because people, let's understand, I am losing money already. It's like if you don't give me claim, I'm now paying tax on something which I already don't have. Yes, sir. Yes, sir. Therefore, this is an allowable expense. Since it is already there in P&L, I will ignore it off. I will ignore it off. Yes, yes, yes. Sometimes it's okay to act like a Marwadi person. You will get the claim. On 1st December 2024, the company has paid royalty of 3 lakh rupees to Mr. Roser, a non-resident individual, after deducting tax at the rate of 20% under section 195, read with 115A. The tax was deducted by the company is not deposited till 30th November. However, Roser has submitted his return on July 31st, 2025, after including this income and giving a refund of 20,000 rupees. People, default in deducting TDS? No. But default in payment of TDS? Yes. There is a disallowance for you, despite the fact that he has filed his return, because the claim will only be given when he files his return, and he's filing the return next year. So claim will also be given next year. So current year will get a disallowance of rupees 3 lakhs. On scrutiny of the records, the following information and details were extracted by you. The company has sold a plot of land to Libra Limited, a domestic company, for 35 lakhs on 15th April 24. The said plot was purchased on 1st May 2022 for 26 lakhs by Dinkar Synthetics. Dinkar Synthetics held all the shares of Libra Limited. This is a wholly owned subsidiary, and therefore profit is exempt. The profit is exempt. The only question I have is this profit shown, not showed? Is this profit showed, not showed? Nothing is given. I can't do anything. But it's also saying on the scrutiny of records, people. I'm not sure what does that mean. Yes, my assumption profit is not shown. So therefore, because capital gains also is exempt, this is also not shown. So therefore, leave it off. The company has obtained a loan for 5 lakh rupees from Manu Textiles Private Limited, in which it holds 16% voting rights. Company has an accumulated profits on the date of receipt as 2 lakh rupees. I am at, very good, section 222E. I am at section 222E. Closely held company giving me loans and advances will become taxable in the hands of shareholder, provided the shareholder holds at least 10%, but it is only taxable to the extent of accumulated profits, which means taxable for 2 lakhs under the head IFOS. Taxable for 2 lakh rupees under the head IFOS. The company has purchased a motor car for the purpose of business on 23rd August 2023 to mark the incorporation of the company being 23rd August. The return on value of the car on 1st April 2024 is given as 25,60,000. I will get normal depreciation at the rate of 15%. Leave it go. People, this is a motor car and therefore you don't get additional depreciations. Next, the company has the following numbers of workers employed in the factory. All are covered in provident funds. They've given some facts of employees, people, because 80JJA. Complicated question, people. Look at the question. It says number of employees on 31st March 2024 is 480. Additional employees employed during there is 120. Employees who have left is 70, and therefore you have net employees of 530. People, my net increases. My net increases 50, but you are eligible for this is the problem. Jan 21, suddenly out of the blue, they give this question. And they ask you an answer. Tell me, what deduction can you claim? Are you claiming it on 50 or are you claiming it on 120? Very good. Both are correct. I said there is no conclusive answer on this, and therefore whatever you do is right. The new employees have been recruited on a mass recruitment basis on 1st July 24 at a pay scale of 15,000 per month. Payment is made through account pay checks only. You have two options. Either you can take 15,000 into 12 into 30% for either 120 employees, or you can take it for 50 employees. Your choice. It doesn't matter. Take the 80JJA claim accordingly. The good turnover of the company is given as 450 crores, and the company has not opted for 115BAA, which means you are at tax rate of 30%. You are at a tax rate of 30%. Let me show you that, people. Yes, funny thing they wrote. Deduction under section 80JJA. Since Zinker Synthetics is subject to tax audit and has employed additional employees, he is eligible for 120 employees fully. However, as per clause 2 of explanation 80JJA, additional employee means an employee is employed and has the effect of increasing employment, blah blah blah, and hence remuneration would be eligible for deduction under 80JJA. Alternatively, it is possible to take the view that 70 employees retrenched during the year have to be deducted from 120 to arrive at the actual number of additional employees, and if this view is considered, you can take 50K deduction. But their predominant assumption is 120. This is what I was telling you when I did the analysis also, people. Yes, doesn't matter how many you exit. As long as you can have an increase of one employee, claim deduction on all additions. Deduction on all additions. And this is me telling from ICI, not from my side. Yes, ICI itself is okay with it. Then what is your problem? Yes, tomorrow if a raid comes to your house, said ICI told it. Yes, my mother body approved it for me, so therefore I'm doing it that way. Big deal. Yes. This is your compulsory questions, people. By now you would have realized some adjustments which are standardly being tested. Provision for gratuity, periodical wage revision, TDS defaults, cash payments, specified persons, your wholly owned subsidiaries. This is what ICL loves to test you multiple occasions. Yes, what happens apart from this, people, is a one-off adjustment which ICI would love to test you. Yes, those one-off adjustments have been notified here. To the extent I could go through the books and I could find a complicated paper, I have put it here. But you will realize, people, not every attempt questions are here because it is only repeating itself. Yes, every question is just repeating itself. They will take 4 questions, consolidate and make it into one question. So I didn't want to waste time on that. Otherwise I can make 25 more questions. Big deal. Yes, but I don't want to do that for you, people. The only thing which is missing in this paper, the only thing which is missing in the solutions guide is all questions relating to November 24 exam. Because we started the batch before that. right? So only the questions relating to number 24 exam is missing. But here's the good news for you people, which I would have told you earlier also. ICI recently launched something called as model test papers. ICI recently launched something called as model test papers, and they have made my job easy. November 24 paper has been notified in that model test paper with assessment year changes. Which means I don't have to change the assessment year or make modifications to the question. The question is already ready. So you can go through the model test paper and you will get the papers with amended loss of 25-26. Model test papers, like I told you that time also, people, is 6 papers given to you. Don't worry about all the 6 papers. Yes, 2 papers of that are May 24 and November 24. May 24 and November 24. Balance 4 papers are MTPs of November 24 and MTPs of May 24. That is how they do it. So they took no efforts, 0 efforts they took. Yes, they just literally took the paper and changed the assessment year and gave it to you. Yes, so you don't need to worry about all the papers. Only pay attention to November 24 ka paper. Only pay attention to November 24 ka paper. I don't remember what of the 6 was November 24. I will check into it and come back to you. Yes, so I'll give you that paper alone for you to practice, people. If you want, you can write that paper as a test also. If you want, you can write that paper as a test also, more for your comfort. Anyway, you're writing November 25, right? So therefore, generally, if a person is writing May 25, I will never ask them to look at November 24 paper, because that will not come. Yes, most of the questions which are tested in November 24 will not get tested in May 25. So therefore, I don't do that. But since you're having one more attempt in middle, you may have some questions coming from November 24 also. So a good paper for you to solve. Yes or no? Yes. So try it out at your end, people, or let me know. We can do it as a test also. That's something which I will let you go with. On the other hand, people, if I'm looking at your study materials and everything, your RTPs have been notified for all subjects except for direct access. Okay, so RTPs have not been notified for direct access. I'm talking about May 25, right? So RTPs have not been notified. So when it comes, we will discuss together. Until that time, it is not required. And your case study booklets have also come out for all subjects except for direct tax again. Okay, so case study booklet is also not ready, and therefore I have not given you the MCQ book. Yes, I'm yet to complete your MCQ book. For obvious reasons, I don't have the MCQs in my hand, right? So once ICA gives out the MCQ booklet, I will add that to my collection which I already have for the past papers, and I'll give you a consolidated MCQ book for you to practice at a later stage. Until that time, you don't need to go through MCQs and all, people. It's not important for you to go through. Yes, so these are the 2 things which are pending right now as we speak. With us completing the comprehensive questions right now, officially nothing else remains pending from your syllabus perspective, right? But what remains pending right now is still the revisions, which are to be discussed. Yes, now I understand next week Saturday is a holiday for AFM classes. People have office that day, is what I understand, right? And therefore we will not be able to meet up on Saturday also. Yes, Sunday, since you have classes, we definitely cannot meet up, right? So next week, most likely you don't have a class. Unless I feel like we can have a class. Yes, after that I am actually not available from 18 to 22. So Tuesday, Wednesday, Thursday, 18, 19, 20, 21, 22. So Tuesday, Wednesday, Thursday, Friday, Saturday. So next to next Sunday, I'm not sure, which is 23. If there is no class of AFM on 23, then we are having a class that day, where we will then start continuing with our revisions. The first thing which we'll be doing is your NPO chapter, and the moment we're done with NPO chapter, we'll automatically move to module number 2. After this, people, I hardly expect maximum 2 to 3 revisions, not more than that. Yes, so maximum 2 more classes we should be able to complete it. Yes, 2 more 7 to 1 slots I'm talking about. Yes, because once we do with NPO, miscellaneous topics are only about assessment process, appeal process. Your international taxation will take time. Yes, your international taxation being transfer pricing and non-resident will take time, and followed up with penalties, GAR provisions and all those things. Those are smaller chunks. So that will be 1 day's class. Yes, so predominant time will be taken up in your non-profit organization, your international taxation, or transfer pricing piece. Yes, so we will effectively be able to complete it in 2 revision classes. So max to max, let's say March end. Yes, by March end you should be done with the revisions, is what my feeling is. After which, if you have time, then we have other discussions to do. Yes, so this is what the course of action is, people. I am candid on the fact that we have not discussed one critical chapter called as tax audit. Yes, you are aware about it. I am also aware about it. I think, like I told you earlier also, people, tax audit is a compulsory question coming in exam. Yes, there is one question coming from it in exam, but what I've realized from ICI is ICI has lost all its imagination, right? And so what has happened is ICI has already notified some 6 to 8 questions which is there in your, yes, and these questions are repeating itself. These questions are repeating itself. Tax audit, there is nothing much for me to discuss, people, okay, because unlike audit where tax audit was there earlier, in income tax they are not testing you on the tax audit. Yes, they are asking you boring jokes. Yes, they're literally giving you a case scenario and they're coming and saying, in the case scenario, this is what is happening, what is your opinion, right? All these things are actually not coming from the tax audit, they're actually coming from case laws. Okay, so they're asking you questions. Let's say, for example, if I remember a question, the question came and said that there is a person who has decided to give his tax audit to you as a CA, right? During tax audit stage, on verification, you found out that the person has not deducted TDS on payments. When you requested to him, why have you not deducted payments, he came and confirmed saying section 40 AI confirms that TDS is only happening on paid items, it is not happening on payable items. So if an item is payable, then therefore TDS will not apply. As a CA, you have also confirmed this analysis and have reported a clean tax audit. As a CA, looking at it, do you confirm this position? No, people, when we did 40I, I came and confirmed to you. Palam Gas Services, case law which comes and clarifies, when you use the word paid, it also means payables. So if there is a accrual, then also TDS is liable. So here you have to come and say, case laws have come and confirmed saying TDS is also approved on payables, and therefore the CA has done a default. He is guilty of misconduct and therefore can be liable for payments, and therefore can be liable for whatever nonsense you have. Yes, so you can be liable for that. From an income tax perspective, you will be liable for a penalty, which we have already discussed earlier, people. Yes, 1 lakh rupees for a default, 1 lakh rupees, 271J, 1 lakh rupees will be liable for a certification default, and you can be liable for other things. 2 questions which get tested in exam are questions like these. This is completely covered in your question bank, so I just want you to go through and take it back. No tax audit related questions, people. These are all case law related questions, so just go through it, you will understand everything yourself. If you still have a doubt, I'll do it for you. Second question which gets tested in exam, people, is to come and confirm whether tax audit is applicable or not, meaning how to compute turnover. ICA has given a guidance note on this, people. ICA has given a guidance note on what to be considered. The only one extra thing which you need to keep in mind is when you're talking about it, also take GST into consideration. That is the only difference. Yes, so whatever turnover you report in your financial statements, add output GST to it. That is also considered as turnover. That is the only extra thing which is happening, based on which you will have a threshold check. 2 questions relating to that also is there in your question bank. Yes, so technically tax audit, there is nothing to read, you just need to go through the past exam questions, which is what is the question bank. Yes, so I want you to pay attention to those, people. Half an hour's time, max to max, half an hour's time. There is more story, less answer. Yes, story will go for 3 sides, answer will come for half a page. Yes, so it's a case study related thing. Just go through it once quickly, you will understand everything beautifully. There is no challenges in that. If you still have any challenges, I will discuss it with you subsequent classes. Yes, come back in the subsequent class and give me an update on the tax audit so that we can take it from there. Clear, everyone? Yes, great. Thank you, people. Have a good weekend.